All right, let's get this party started. Good morning, everybody. Nice to see you guys keeping so busy this morning. Whole lot of chart reading going on, whole lot of patience happening. I love it. Good morning, Mike M. Nice to see you today. Derek, Gary, Safia, Joel. Good to see you guys in here today. It's 21st day of July. Can you believe it? Is it just me, or the older I get, the quicker time seems to pass? Man, this old age stuff is for the birds. Guys, my name's Mark Novak. Welcome to the room. It's good to see you. Um, I'm looking for my new names. Hey, good morning, Alan. Nice to see you. How's everyone doing? Are you guys ready? We're going to do it today, guys. We are going to solidify some good stuff. We're going to cement in your heads that simplicity is the best approach, right? We're going to focus on advantages. Um, I'm excited for today. You ever have one of those days you wake up, you're like, man, I'm going to change the world today? That's how I feel today. So brace yourselves, guys, because it's your world that's getting changed today. Lil Saigon, nice to see you back in the room. Who else are my newer people? Who are my demo people in here? I know that it's still a light crowd as we get into the day. Friday's tough to get going sometimes. Samuel, how is your trading going? I don't see pictures from you anymore, right? You guys get through the demo process and you're like, hey, you know what? I've got some software. I'm not going to talk to Mark anymore. Guys, keep talking to me. I like it. K-Pops is back in the room. Good to see you, K-Pops. Guys, we're going to go through systems and routines today. We're going to talk about doing the same thing every day, right? Consistency. The same thing, bringing us an advantage, an edge. I did start. Can you guys hear me? Guys, give me a Y in the room if you can hear me. Yep, so Ziba may need to reboot. Let's tell her. Oops, my caps are on. Sorry, I didn't mean to yell. Got it. Same thing every day. Guys, remember, everything we do revolves around advantages. Good morning, Jose Trades. Jose, I'm working on something for you. I'm working on some NASDAQery, so um, hopefully it helps out. Oh, you're still vacationing? Nice. Okay, just wanted to make sure. Just wanted to make sure. Good. Have fun. Shoot, post a picture or two, Samuel. I want to see the good stuff, right? That sounds amazing. Guys, every morning I'm going to forexfactory.com and I'm looking at news and I'm making sure that there's nothing going on that's going to make the market seem a little crazy, right? Making sure. Is it? I'm oh my gosh, I am first world ignorant on this one. I'm not sure where Trinidad and Tobago are. And that's a little embarrassing to say because I'm educated and I have no idea. Oh, you're from Venezuela. Okay, good. I was thinking Canada, Jose, and I was like, holy smokes, I don't think they're up there, but am I wrong? Okay, maybe I am a little smarter than I thought. Maybe it's just early, right? Very nice. All right, guys. So we're looking for news. We're looking for high impact. We're looking for medium impact news, not because of what they say, just because that it may move the market, right? It may create a jump, a spike, a reversal, something that seems a little unwarranted at the moment. So take a moment every day and look for your news and see what's going on. And guys, this classroom is amazing. Everybody works together and looks out for everybody, which is pretty cool. Um, Before we get trading, I want to share the pictures that I just shared with you guys, and then we'll get into the lesson because there's a lot of you that aren't looking for the rules right now. You've got the rules, and you want to start looking for, oh, that looks amazing. Look at the mountains. I love it. And a lot of you are looking for these 50-50 trades, right? So guys, this is for you this morning. I want you to take this picture as you look for those medium probability trades this morning. And I want you to remember these things. If the market's not coming from a termination that creates a full reversal, it reduces your chance of success, okay? If the small triggers, and this is a lot of you, if the small triggers have barely cleared, like they're peeking their head out just over resistance. Guys, be patient. Let it get half a price bar. Let them get up and above the area. And if the market's trying to break multiple areas, guys, the more areas it's trying to break, the less likely all of them are going to break. Something to think about is 50-50s, guys. Patience is the key to what we do here. And the most difficult thing that any of you will ever have to do during the day is absolutely nothing, right? That's the hardest thing to do as a trader, is absolutely nothing when the advantages aren't there, guys. We trade advantages. So for you 50-50 traders, guys, we're going to talk about the 50-50. But for those of you that know what it is, for those of you that are looking for it, for those of you that are trying to take them, maybe that'll keep you on the right side of things a little bit today. Everything that I talk about comes from the education page, guys. There's no secrets with Nexgen. Lady P 1917, nice to see you in the room again today. I love seeing these people coming back. Gary 9974, Cedeno is here too. Man, I love it. We got all the new folks. Hey, new folks, I'm going to remind you, this is your class. I want to hear from you today, right? I want to see a picture from you today. I want to get a question from you today. Ask me some stuff. Let's get you where you need to be. Guys, your education page is your pathway to anything and everything that you need to be successful with the Nexgen software. The tutorial section really has every answer you could hope for to build an amazing foundation. And then I share this every day, guys, because I believe in this wholeheartedly. The path to becoming a confident trader ASAP. It begins with posting your trades in the class. It begins with posting pictures of anything that you have a question about in class. It revolves around the conversation that you and I have. Every time you post something in this room, guys, you and I are having a private session. There's people looking in and learning from our private session, but that time belongs to you. I'm going to look at your trades. I'm going to look at your ideas, your thoughts, and we're going to talk about all of it, right? We're going to go through and I'm going to identify things that are being done well, and I'm going to identify things that maybe are creating challenges. And for a lot of you guys, I'm going to be able to recognize a pattern in your trading, maybe something that's keeping you from getting where you want to be. And I'm looking at the names in the room, and there's all of you that I've recognized patterns with, and it's made you a better trader ultimately. So let's give me the opportunity to help you by posting your trades in the class. And then guys, use your performance spreadsheet. I'm going to give you a bunch of feedback, but I want you every morning to go back and look at what you did yesterday and give yourself feedback. What is it that you're doing that worked? What is it that you're doing that didn't work, right? Let's begin to recognize the patterns that bring success and the patterns that deter us from that success. What feels easy? What keeps you relaxed? Guys, I can tell you right now, when I break my rules, when I deviate from my plan, that's when my palms get sweaty. That's when my heart races. That's when my brain knows that I'm relying on hope rather than advantages. And that becomes difficult for me. But the stuff that keeps, that gets me nervous is that those are those instances. The relaxed one are rules-based, advantages-based, right? Everything is going my way and I'm feeling good about it. And if you go back and look at what you did yesterday, and you bring those lessons into today, you will be a better trader every day. Every day you're going to get one step closer to your goal. It's going to accelerate the learning process. So guys, I encourage all new users, keep that trading log. Nexgen's provided it for you. It's in your Nexgen study picks, but start filling it up with pictures. The first hour of this classroom is high probability trend trades, guys. And we're going to learn the trigger line of Fibonacci rules for when it's okay to trade. And John Novak, the CEO, is posting, showing you some of these things that we're going to talk about. But he's going to stop posting for the first hour so that he doesn't distract you. Good morning, Debbie. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Guys, we're going to help you identify advantages. And through those advantages, you're going to learn to take a trade. That's what our first hour is dedicated to. It's dedicated to a high probability trend trade, to a trade where every indicator on every chart agrees for the trade, for a trade that really typically wins 70 to 80% of the time, gives you confidence through success. Guys, this is going to be your foundation. You're going to simulate, you're going to practice these trades every day, and you're going to do your best to follow the rules. As a brand new user, right? Cedeno, Lil Saigon, Lady P, as a brand new user, Donovan, it's going to be difficult for you to know if you've been following the rules. And that's where we go back to post your pictures in class so that we can make sure that you're not practicing the wrong trades, that you're not setting yourself up for long-term failure. We're going to simplify. I have been screaming simplify from the top of my lungs for the last week, guys. We are going to keep it easy. We're going to focus on the high probability trend trade first. We're going to focus on a trade, and I'm going to go straight from the tutorials right to the glossary of common terms. We're going to focus on a trade that is defined when each indicator on every chart agrees for the rules of the trade, guys. This is when your triggers are the strongest. This is when there's absolutely nothing in the way between you and your target. This is when there's no termination conditions, no areas that may reverse the market. Guys, this high probability trend trade is going to build a solid, strong foundation for you. And what it's going to do is it's going to teach you to read your charts. Because 90% of your day is going to be spent waiting for advantages, reading your charts, taking your indicators, and the information that it gives you. 10% of your day is going to be pouncing on those advantages like a tiger in the jungle. And you're going to be able to take that high probability trend trade through your chart reading because you're going to understand fluently through your study where the market is likely to continue, guys. And that's going to be your entry point. That's going to be where you get in for that high probability trend trade. You're going to understand eventually as you learn and grow with the software where the market is likely to go. You're going to be able to use Fibonacci. You're going to be able to use momentum. And I want you to see this. You're going to put smart targets off in the distance, right? And you're going to be able to get the absolute most out of trades by understanding where the market is likely to go. And then you're also going to understand where the market is likely to stop. And these are what we call termination conditions. These are giant red flags waving in your face that say, hey, the trend may end, the market may reverse, you've lost a huge advantage, and let's just sit on our hands and wait for those advantages to come back. And guys, 90% of your day is spent reading indicators, 10% of your day is taking advantage of the information that they give you. And these likely to stop areas, these termination conditions, guys, these are going to behave as an anchor as well for the highest probability trend trade that you can take. When a termination condition, when an area where the market is likely to stop does in fact stop the market and reverse it, the high probability trend trade that you take after that termination condition is your best chance of success. So we're going to learn how to identify those. And we're going to simplify. We're going to focus on one trade initially, right? And then that one trade and your ability to read charts and all of the education is going to expand your knowledge into looking for more and more opportunities, seeing more and more patterns, guys. But I'm going to ask on bended knee, keep it simple initially. Give yourself that foundation. Don't go chasing everything until you get really good at one thing, right? After class the next day, guys, and especially coming into the weekend, use that market replay. Go through, replay your market, look at the day that you traded today and go back and fix your mistakes, right? Maybe you're working on management and you find an opportunity to hold longer. Maybe you're working on entries and you have a way to go back and replay that day and take those better entries per the rules. Skip the trades that you shouldn't have taken, take the trades that you skipped, and then take pictures, guys, and please bring them back to class the next day. I'd love to talk about what you're doing, whether it is in the live market or whether it's in your market replay. And then we're going to repeat this process every day. And I say we because you're going to simulate and post in class every day. And then I'm going to give you feedback every day. And you're going to repeat this process until you're always taking the correct trades. And if you're always taking the correct trades, guys, you should be winning more than you're losing, right? You should be putting yourself in a position where you're guaranteeing yourself that you can win. And that's when you're going to go through and you're going to test that great trading plan up against one of those prop firms. and really kind of make it live and put a little pressure on yourself and see how you react to that pressure. But I'm going to share this because this path hasn't changed in decades. If you really want to be a day trader, if you're serious about being a day trader, guys, this is how you get there the quickest, right? You're going to do your part, I'm going to do my part, and we're going to meet in the middle, high five, and you're going to find that success that you were looking for. The high probability trend trade that I talk about in this first hour, guys, it is 3 rules. That's it, 3 rules. Don't overcomplicate it. 3 rules that provide 3 advantages, guys. You're going to have, every time you enter a trade, the advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And these are 3 absolutes in the beginning, guys. This is the trade that's going to teach you to read your charts. This is the trade that's building that great foundation. And guys, these trades happen on only two charts. That's it. You're going to use a large chart and a small chart. And the large chart is going to give you 2/3 of your advantages. The large chart is going to identify direction. The large chart is going to identify momentum. The large chart is going to identify your areas. It's a broad stroke of a brush. It's taking the general consensus of the market in only 1 bar, and it's letting you know all of this great information. And your first 2 rules. Rule number 1 is going to give you the advantage of momentum. Rule number 2 is going to give you the advantage of a clear path, of absolutely nothing between you and your target. And when those 2 rules are met on the large chart, guys, then you can turn your attention to a smaller chart, to a faster chart, to a refinement chart. What happens in only 1 bar on a large chart is going to happen in maybe 15 to 30 bars on a smaller, faster chart. And this is where rule number 3, that third advantage of an entry area, is going to come into play. And by using that refinement chart, what you're able to do is you're able to reduce risk, you're able to maximize profit potential. 1 bar determining direction, momentum, and the areas that you need to look out for. And in this 1 bar, you see the black square? All of these bars take place. It's a refinement chart. And when you refine it down, your risk is minimized. Your profit potential is maximized. And guys, it puts you in a high probability trend trade. It puts you in a scenario where you have the potential to win 70 to 80% of your trades every time you follow these rules. So we're going to talk about it in great detail. If you have questions, I want you to raise your hand. I want you to post it in the room. I want you to interrupt, please. The more you interrupt, the smarter we all get. Guys, we're going to talk about rule number 1 first. And rule number 1 says that you have to have strong trigger lines. Strong trigger lines, well, you know what? Before I get into strong trigger lines, let's do the easiest thing you're ever going to do with the software. You ready? Let's identify the trend on the large chart. If the background on the large chart is green, we're in an uptrend. We're looking for rules to be met for high probability trend trades long. That's the most basic approach that you can take to keeping yourself on the right side of things. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trades short. It is the first advantage that you're going to give yourself, and it's an advantage that's going to be in place before you ever start looking for the rules. But once you have that trend defined, rule number 1 says that on your large chart, on that broad stroke of a brush, you must have strong trigger lines. And strong trigger lines in an uptrend when the background is green is defined as the small triggers are crossed up and they're above the large triggers, which are also crossed up, and they are both wide and angled in the direction of the trend. The space created between the small and large triggers, that gap between the two, lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a phrase that you're going to hear in class all day long. You're going to see it annotated on people's charts. Hey, Mark, I had OFM. This is great. And when you have that odds favorable momentum, that strong trigger look, that best of the best look, this is the most favorable look for buying a pullback to Fibonacci support for continuation, that point where the market is likely to continue to get you off to that next area, to that profit target. In a downtrend, small triggers are below the large triggers are wide, they're angled in the direction of the trend. The space between the small and the large, like scissors open, ready to cut, lets me know that the odds are favorable for the market to continue down. And this is the most favorable look for selling a pullback to an area inside of favorable large triggers on a smaller, faster chart. And guys, when you're buying or selling a pullback, it's going to look like these tails. It's going to look like these wicks. Lady P, everything that I post in the room, whoops, sorry, I'm trying to pull it over so that you can see it. Everything that I post in the room, you can right click and you can save the images if you want. If I post a file in the room, you're able to download it. But everything that I'm talking about right now, these pictures that we're looking at right now, these are coming from the education page. These are coming from, let me give you the first one. Here's the education page, and I'll give you that link. And then from the education page, I'm going to the tutorial section. Trigger lines define trend. This is going to be our first rule. Termination conditions will be our second rule. And areas for entry are going to be our third rule. So all of these are going to be right there for you. And then also, if you come to Discord, everything and anything that you need is also available in Discord. And if you scroll down a little bit, there's sections called 101 Basics where we talk about the basic ideas all day long. And then here's those trading rules once again, not only for the high probability trend trade, but a few trades that you move on to. So great question. Knowing where to find the answers is key, right? I'm going to give you guys fish all day long, but this is going to help you when you need to learn to fish. So odds favorable momentum starts it. Guys, if you committed only to odds favorable momentum every time you take a trade, that giddy up in the market is really going to give you the advantage. It's going to even cover up a couple mistakes that you might make here and there. So I'm committed because when the small triggers work their way back inside of the large triggers, guys, this is a weakening of the large triggers. This is what we call anything can happen triggers, because it may go up, it may go down. We really don't know because we don't have that advantage of momentum. So if you allow it to be simple initially, remember simplicity is the key, right? Look for those high probability trend trades from that point of separation until they return. There's some of those potential entries. From that point of separation until they return, once again, there's some of those tails, some of those wicks that might be entries on a smaller, faster chart. And commit to that odds favorable momentum, because when they weaken, when anything can happen, notice that that's a precursor to a reversal in the market. We've lost the momentum and the market has made the decision to stop moving up. Anything can happen. Hey, good morning, Ron. Anything can happen triggers the market reverses, creates odds favorable momentum. There's your potential entry. There's your potential profit spot up here. Ultimately, they weaken. The market reverses again. Odds favorable momentum, and it continues down. You're going to see this pattern all day. And you're going to see it at some points with momentum, at some points anything, and just sitting on your hands, waiting for the advantages. And I circled this one and I created this picture because one of the advantages that Nexgen gives you, one of the great things about this software, about this foundation that we're building, this methodology that I'm teaching, is that if you commit to rule number one, you're going to find yourself not getting caught in areas of consolidation. Because when the trigger lines don't agree with one another or with the background color, this is buyers and sellers. This is institutional traders, deep pockets investors fighting for supremacy. One wants the market to go up, the other wants the market to go down. And Nexgen users, you can visually see that fight because there's no agreement in the trigger lines. This is where a lot of new users are going to try to predict. I think it's going to go up. I think it's going to go down. But the reality is, if you can learn to sit on your hands and wait for that odds favorable momentum to come back, it's going to keep you out of a lot of mess, and it's going to allow your profits to remain profits rather than giving them up with predictions. So rule number one, let's go to a live chart and let's just take a look and see if we can find some odds favorable momentum. This is a crude oil chart. I'm going to take off every indicator with the exception of trigger lines. And we're going to start the process of studying. When the smalls break away from the large, when the large are wide, they're angled in the direction of the trend. Remember, this is the most favorable look for selling a pullback. These tails represent a potential pullback. I'm going to get in the habit right now of scrolling back and circling tails when there's odds favorable momentum, because when we talk about the rules, we're going to see if those were entries. And if I tighten things up and scroll back, does everybody see how there's a lag, right? Odds favorable momentum doesn't happen every moment of every day. Anything can happen triggers create a push down, right? Anything can happen triggers. There's that reversal. Give me a Y in the room if you're with me, especially my new users. Lady P, Lil Saigon, Cedeno, Donovan, Gary. Guys, how we doing? Pretty simple, right? Everybody has odds favorable momentum in the first 10 minutes. They're like, gosh, that's the easiest look ever. Scissors open, look for the next rule. So we're going to stay committed to that one, guys. It's going to create a boatload of advantages for you. I'm going to put these indicators back on, and we're going to go back to rule number 2. I'm going to go back to the rules real quick. Pull up my picture. When the large chart says that we have strong trigger lines, the advantage of momentum is in place. 1/3 of the equation is there, right? So Bradford, you reviewed yesterday's S&P, and 100% of the time there was a tail at every direction turn. Is that good or bad? I'm not sure. There has to be a tail, right? At every direction turn. Because that meant that the market... So let's talk about what a tail is. There will be a tail at every direction turn. Because what happens on a tail, Brad, is right here, price is coming down, right? And then it heads back up. It doesn't go low enough to create a reversal bar. At every turn in the market pushes up and then it goes down, right? You have to have a reversal bar at every turn, and every reversal bar has a tail. Does that make sense? So the idea, Bradford, is we're going to... So there's a reversal bar right off of Fibonacci resistance, right? It has to happen. And there's a reversal bar right off of Fibonacci support. The rule that we're about to talk about right now is going to keep us from taking those trades into these areas. That took me a second. I had to visually see it. Absolutely. Every time the market turns direction, there's going to be a reversal bar on every market, on every time frame. So what we're going to look for, it has to. So what we're going to look for are those points where it didn't push down far enough to create a reversal bar. And that's what's going to get us to our awesome entries. And we're about to talk about why a reversal bar is likely off of this look right here, because this is what we call a termination condition. Absolutely, K-Pops. It was almost like a word problem, so I had to visualize it in my head, but you're absolutely right, Bradford. Every reversal is going to have there will be a reversal bar. But what we're going to do is we're going to use the rules to find that instance where the reversal bar isn't able to form, and that market is likely to continue up, and it begins with odds favorable momentum. Thank you for that. Different way for me to think about it. So those strong triggers give me the advantage of momentum. The first part of the equation is true. Next, we're going to stay on our large chart. We're not going to focus on the small chart, and we're going to look to make sure that termination conditions are false, that we have not reached an area that's likely to stop the market. And the areas that are likely to stop the market are red Fibonacci resistance, blue Fibonacci support, all these things that you're going to see on your chart. And I'm going to give you guys this picture because my new users, this is just a great identification tool for you. Red resistance, blue support, yellow 1-to-1s. We're also going to look at a divergence high, and we're going to look at a divergence low. A divergence high means that a pivot was formed in the market. The market went from up to down. And when it did, there was a loss of momentum. That's all it means. Divergence, this magenta line, is nothing more than a loss of momentum. And this divergence high, this line prints right about the third bar. Divergence low means the market went down, it went up. It just signifies a loss of momentum, but this line doesn't print until about 3 bars in. So, and that's important when we talk about these termination conditions, when we talk about these areas that may reverse the market, because it's a very simple two-part process to determine whether or not you've reached one. And the first thing that has to happen is price reaches an area. When I say price reaches an area, I mean that these dynamic Renko bars that are red, that are trending down, they reach that Fibonacci support. When they reach an area, doesn't matter what the area is, fibs, one-to-ones, divergence highs, divergence lows, if it reaches a low point, right, support, and the trigger lines remain above, this is an area that may reverse the market. This is an area that may create a bounce too big to trade. Guys, when John Novak created the algorithm for this software 25 years ago, he had a friend in the pits in Chicago, and his friend's job was to know where the institutions are buying and selling, knowing where the institutions are reacting, where markets may reverse. He couldn't tell John what those prices were, but what John could do is send him his fib numbers and say, this is where I have highs and this is where I have lows. And what the guy could tell him is, John, you're within 50 cents on almost every one of your fibs. These are the areas where price reacts because these are the areas where the institutional traders react. Next-gen users, you have the advantage of seeing these areas, of knowing where they are, and knowing that when the trigger lines remain above support, there's no reason for you to take a trade into them. The path isn't clear. So when is the path clear? If I have support and price reaches it and all of my trigger lines are above, I'm not doing anything. I'm waiting to see if the market's going to reverse or if the area will break. An area is considered broken when small and large triggers find their way to the other side of the area. So if it is resistance, small and large triggers have to get above resistance. If it's support, small and large triggers have to get below support. And you'll notice that support begins to behave as resistance. The path is clear, the odds are favorable, and there's one of those tails right up to the area likely to stop the market, and the market continues down to that next area. So it's going to be a simple two-part process, guys, and I'm going to share these pictures with you right now. Whoops. Or I'm just going to close it out on accident. It's going to be one or the other. There we go. So when we talk about termination conditions at a high point, here's one of those pivots. This pivot is a loss of momentum. Price didn't reach this magenta line. Price created this magenta line. So in the moment, it's nothing more than a loss of momentum. The market pushes down and it pulls back up, and then now price reaches that divergence high. It can't, the trigger lines remain below the divergence high. Now I have a termination condition, guys, and this is called a pivot stop out of a divergence high. And this becomes a very powerful termination condition that may reverse the market. Price reaches Fibonacci resistance. All of the trigger lines remain below, even with that odds favorable momentum. No more long trades. It may bounce, it may reverse, but in the moment we know that the path isn't clear, so we're not looking for that opportunity for a long trade. And then once again, price reaches resistance as well as one-to-ones. None of the trigger lines break above. This is an area that may reverse the market. Next-gen users, you get to stay safe, right? You get to not hope that the market continues up because visually you're aware that we're at a point that may reverse. And the same is true at a low. Price reaches those one-to-ones. When it reaches those one-to-ones, all of the trigger lines remain above. No more short trades, guys. And look at how the market reverses. And when this termination condition creates a full reversal and gives you that odds favorable momentum and that clear path, guys, that's your highest probability trend trade. This is what we call a strong bottom. Termination conditions that create a full reversal are strong tops and bottoms. It's the precursor for your best chance of success. Price reaches Fibonacci support. All of the trigger lines remain above. No more short trades, and it keeps you safe. Price begins to lose momentum. It creates one of those divergence lows. On its own, it's not a termination condition. When price retests it, when it comes back and reaches that divergence low, and none of the trigger lines are capable of breaking through, now you have that pivot stop out of a divergence low that creates an amazing opportunity and often reverses the market. So I'm going to ask, guys, is everybody okay with this? Brand new users, we're going to keep it real simple in the beginning. We're going to focus on the absolute best of the best, and I want you to keep it as basic as you can. Price reaches the area. If none of the triggers break through, the area is not broken, the path isn't clear, rule number 2 is not met. Can you give me a Y in the room if you're comfortable with this concept? Or give me an N in the room if we want to go over it again. When both the small and the large triggers break through resistance, we consider the area to be broken. The path is now clear. Look how resistance behaves as support. And with those odds favorable momentum and that tail, there's a potential entry. Absolutely, Lady P. Two-part process, and I wrote it right here at the bottom. The first thing that has to happen is price reaches an area. And if the triggers remain below a high, that's your termination condition. Let's go to the live market and look at it. And watch this. We'll just kind of run it up bar by bar. What do you think? The market's moving up. We're watching it. It's going, it's going, it's going. We're enjoying it. And right here, price reaches resistance. When price reaches this red Fibonacci line and all of your trigger lines remain below, Lady P, we've reached a termination condition. This is your visual indicator that the market may stop, that it may reverse, that it may create a bounce. And here's the amazing thing, is sometimes they break, right? And we go to that next level, and there's resistance again. And sometimes we have to sit on our hands and wait for advantages. This area is broken, but we've reached that next key area. None of the trigger lines have broken. And we get that reversal, right? We didn't know if it was going to be this line or this line. We didn't know if this line was going to break or hold. But what it does is it gives us this moment of patience, this moment of clarity that we just need to sit on our hands for a second. And there's that reversal that comes right off of that Fibonacci resistance. So you can scroll back and you can begin to take looks and see weakened triggers right at support is a great opportunity for the market to reverse. And if you come up to the highs, you'll see these key Fibonacci areas all day long. Resistance, no triggers. Support, no triggers. These are your holding patterns. And then we're going to look for opportunities in between these lines. So we're going to look for odds favorable momentum. I'm going to grab a chart, hopefully that has a potential setup, right? We're going to look for odds favorable momentum that's coming off of a termination condition. Crude oil's kind of putting on a clinic today. And we're going to look to see if there's any of those tails, any of those little pullbacks. And then ultimately, we're going to look and see if that was an opportunity to make money. So we're going to come back to that one and take a look. But one of the best ways to study is to go back on any market. It doesn't matter if it's NASDAQ. It doesn't matter if it is crude oil, if it's the S&P, if it's gold. Use your drawing tools. And when you see price bouncing off of a Fibonacci area, take a picture. And then use your call out button, right? Type on your chart. If you're using TechSmith Capture, you can do this as well. And type out exactly what happened here. Price reaches an area, triggers remain above, pardon my spelling. This is a termination condition. And you're going to see that these happen quite a bit throughout the day. And what it does is it keeps you from taking that short trade, even with odds favorable momentum. Does that help a little bit? And I want to remind you guys too that are brand new, And guys, this is probably the hardest thing for all of you smart people to realize is that when you're learning something brand new, it has to be a foundation, right? It has to be step by step. You need to go through and give yourself a little bit of grace, a little bit of leeway that you are, in fact, brand new. So let it be chronological, right? Step one is we're identifying the trend. And guys, that's the easiest thing that you're ever going to do. Green means up and red means down. And then you're going to go to step two, right? It's like eating an elephant. If you try to eat an elephant, it's overwhelming. But if you take it one bite at a time, the task doesn't seem quite as daunting. Once you're comfortable with identifying the trend, well, then you're going to spend a little bit of time and a little bit of energy making sure that you understand odds favorable momentum, that you can recognize those strong triggers as they're happening. And then when this becomes comfortable for you, most of you by the end of the first day, well, then you're going to start to gauge those termination conditions because you have the advantage of momentum. So you're going to start looking for those broken paths, for those clear, the clear path, the broken areas. And then you're going to piece these three together. And this is like the first piece of the puzzle, right? Staying on that large chart, gauging the advantages, and ultimately you're going to turn that into being able to recognize areas. So guys, I want you to give yourself a little bit of time. I don't expect you to be perfect in the first week. You shouldn't expect you to be perfect in the first week. In the first week, what I want you to do is I want you to see that there's a commitment to your success, that there's a commitment to getting you exactly where you need to be, that you have an avenue each and every day to ask your questions to get your answers, right? Here's a pivot that has a loss of momentum. When this loss of momentum happens, we're not going to consider it a termination condition. The triggers are through support. It's just kind of a pivot with a loss of momentum. When price pulls back to that pivot, the trigger lines remain above. Now it becomes a termination condition. Now we have an area that may reverse the market, and ultimately it does. And since this termination condition creates a reversal in the market, we're going to call it a strong bottom. PFI, if I see an opportunity, we'll talk about the rules being met. I don't trade personally live in front of a classroom because what I find is that me trading live does absolutely nothing for your education because I've spent the time doing the study. If we see the opportunities, I promise that we'll talk about them and the rules being met. But right now, we're just going to cover those rules so we know what to look for. Fair enough? Cool. Going to see the same thing here, guys. Price reaches resistance, no trigger lines break through. If no trigger lines break through, we're not going long. Price pushes all the way down to support. No trigger lines are able to break through support. They remain way up here. I'm not going short. 90% of my day is spent waiting for advantages. Guys, when price reaches resistance again, that divergence high, I get one of those pivot stop outs of a divergence high. I also have two areas of resistance that the trigger lines haven't broken. Guys, this is an amazing termination condition. A pivot stop out at resistance is awesome, and if it creates a full reversal, it's a strong top and your best chance of success. So strong triggers, PFI? Great question. Let me go to the perfect picture. And we'll keep it simple. Strong triggers mean that your small triggers, which are these solid lines, have broken away from the large trigger lines, which are wide and angled in the direction of the trend. So your small and large triggers work together. They work together to create that momentum, and that separation between the two means that the odds are favorable for the market to continue up, which means that we're looking for our opportunities from the point of separation until they work their way back inside. And then the flip side of strong obviously is weak. When they do work themselves back inside PFI, this is anything can happen up or down. This is a weakened trigger line, and you'll see this quite a bit before that market reverses. So let the two work together to create that odds favorable momentum, and you'll be able to identify it really on any time frame at a moment's notice. Smalls are inside, they're weak. Smalls are outside, they're strong. And if we go to the next one, strong trigger lines, weak trigger lines. Go to the next one, strong trigger lines, weak trigger lines, right before the reversal. So that's kind of the first piece of the puzzle, is gauging that. But now we have to see, does everybody see live market? Price reaches resistance. Absolutely no trigger lines have broken through. Guys, no more long trades into this area. This is an area that has the potential to reverse the market, that has the potential to create a bounce. And look at in one bar, I'm going to circle this one bar. And this is why we let the large chart lead the way. In this one bar happening, guys, all of these bars are going on a smaller, faster chart. But what you're witnessing live is Lady P, right? Price reaches, triggers don't break through, and this market's pushing lower. This market is taking away our advantage of a clear path. Does that make sense, everybody? Even with odds favorable momentum, the first rule, the first advantage, without that clear path, guys, we're in a holding pattern. 90% of our day is just waiting for those advantages to come together, and they do. So let's go back to termination conditions real quick, guys, because this is the most broken rule with new users, is trading into areas that may stop the market. Odds favorable momentum, we're in a downtrend, we cleared support, but then we reach these one-to-ones, even with that momentum. And then PFI, this answers your yellow dotted line question. These are one-to-ones. These are 100% Fibonacci alternates. These are going to print real time. These are like fibs that print in the moment when the rules are met. But it doesn't matter if it's a fib, if it's a one-to-one. If price reaches one of those areas and none of the trigger lines break through, guys, no more short trades. No going into that area, because it may reverse the market. And look at the bounce that it creates. And when this termination condition creates a full reversal, it's now a strong. Great question, Johnny Rocket, and I am going to address that right now, because I had an amazing question this morning, and I'm going to do it like this, guys, and I want you to see this. I'm going to create a horizontal line, and I'm going to put it right over that fib. And I'm going to make it a little bit wider, and I'm going to paint that line. Let's find a cool color. I'm going to paint that line deep pink, okay? And I'm going to apply that. And there's my deep pink line. You can't tell, Johnny Rocket, if that's a fib. You can't tell if it's a one-to-one, right? You don't know if it's blue, if it's red, if it's green, if it's pink, if it's polka dot. But what you do know is that price reached an area and the trigger lines didn't break. So Johnny Rocket, what you just showed, and this happens a lot, is your brain is going to try to create scenarios that are unimportant, that don't matter. If I move it up here and I cover those one-to-ones in that fib, price reached the areas and the trigger lines didn't break. It doesn't matter what color it is, right? It's that recipe. And let's come back and we'll see. And man, and guys, this is simplicity, right? This is keeping it as easy as we can possibly keep it. Price reached the areas, the triggers didn't break. Guys, look at the bounce. Rule number 2 is designed to keep you safe. Rule number 2 is going to give you the advantage of not trading into one of these areas that can create a reaction in the market. And I think this is a powerful example happening right here in the live market. And it's this scenario that keeps you from trying to go long at this mid-band and getting run over. Thank you for asking that, because someone else sent me a private message asking that very same question. And I told them that I was going to use it in the lesson today. Guys, if this were a fib, one-to-ones, it doesn't matter if it was a divergence low or a divergence high. When price reaches the area and the triggers don't break, guys, sit on your hands. You've lost the advantage of a clear path. And for those of you that are new that have posted pictures in the room, just to remind you, my first hour, I'm going to talk about these concepts. I'm going to talk about these ideas and these rules. My second hour, I'm going to go back and I'm going to start clicking on all your amazing pictures and we're going to talk about them. I don't want you to think that I'm ignoring you, but we're building a little foundation so that when we have that conversation about your pictures, it comes from a place of understanding what we're looking at. When this termination condition creates the full reversal, right? Large go from red to green, smalls get above. When this reversal gives me a clear path, gives me odds favorable momentum, guys, there's that circle on the tail. There's that circle, that highest probability trend trade, that best chance of success for new users, that 70 to 80% winner, right? That's what we're looking for. Everything says down, we reach an area, sit on your hands. Let's see how it reacts. No reason to get caught up in the mess. And then you guys are going to be able to take advantage of it after it does it. So these are large chart termination conditions, guys. Price reaches, no triggers through, sit on your hands. For you adrenaline junkies, that becomes difficult some days, but I want you to go back and study those termination conditions. I want you to go back and I just want you to look. How many times does Fibonacci stop the market in its tracks? And it's uncanny how often it happens to the tick. And what you're doing is you're developing trust. This pivot with weak triggers wasn't a termination condition, right? Because price didn't reach a line. Pulled all the way back up to resistance, nothing went through. And you know what's pretty cool is when you have a weak bottom, guys, these fibs are so powerful, very often that market's going to come down and find this blue Fibonacci. They're going to try to finish the business, right? I will, PFI, just as soon as we're done with termination conditions, everything I do is in order. Everything that I do in this first hour, first we define momentum, right? And now we're defining that clear path. No, it's great. And I love that you're comfortable asking questions. But if you've never been in here, then you don't know that entry area is going to come after that clear path. We're going to keep it on 2 charts, and we're going to define direction, momentum, and areas. We're going to get the advantage of momentum and a clear path, and then we're going to whittle that thing down to your perfect entry. So we are about 5 minutes out from entries. There's one more termination condition that I want to share with you guys before we go to entries. Sometimes the market turns from nowhere. Maybe there was a clear path and a downtrend. Sometimes there might have been odds favorable momentum and a clear path. And this next termination condition is the only termination condition that I'm looking for on a small chart. And it's 3 divergences in the same location. Hey, Jay Solar, good to see you. 3 divergences, 3 losses of momentum on a smaller, faster chart may reverse the market. It's very powerful when your trigger lines go from odds favorable, right? That strong trigger look, to anything can happen, those weakened triggers. It adds power to those 3 divergences and their potential to push the market the other direction. It becomes more powerful still. Guys, this is small chart. When that third pivot, that third loss of momentum is higher than the previous from a low or lower than the previous from a high, and this look is what you're going to see on a smaller, faster chart when that large, slower chart doesn't identify change because it's moving slower. You'll see those 3 divergences, and they'll help identify when it's not advantageous to take that trade long or short. So 3 divergences is not only going to potentially stop the trend, this is going to be an opportunity for you, if you are in a trade, to manage out because you'll recognize that change. 3 divergences may terminate the trend, PFI. You'll see it on a small chart first, and you'll recognize it on a large chart as well. And if you see it on a higher time frame, that becomes a very powerful indication. In order for it to be considered a termination condition, yes, it's 3. On a small chart, and I'll show you right here, just 1 divergence, I'm not considering a termination condition. But 3 divergences in the same location give you an indication that it may push up, that it may go against it. And you'll see these happen all the time. 3 divergences in the same location. Do you see it right here? Look how the market pushes down. So PFI, on a smaller, faster chart, this is a great way to gauge change that's happening over here, let's see what it looked like on the large chart where that happened. That was at 842. So these three divergences coincided with a termination condition. It lets you know that that might have been a little bit of overrun, right? Keeps you safe, keeps you from looking for that long. Does that make sense? So I like to reiterate, between this one and this one, is that what you're asking, PFI? Yes? Let me go back to the picture one more time for you. I'm going to post it in the room one more time. This is your map, and this is going to help you out a little bit. What are my areas? The magenta will print from a high. The cyan will print from a low. That's the only difference. Both are losses of momentum, but we've changed the colors so that one is from a high and one is from a low. Does that make sense? So it's just, we're color coded. John has made this as easy as he can for new users. But remember, keep it in order, right? Don't jump ahead. Make sure we have strong triggers. Make sure that there's no termination conditions. And then guys, let's find entries. What do you say? Let's look for those spots where we have an opportunity to enter the market, where we have that best of the best. When the rules are met on the large chart, when you have odds favorable momentum, when there's nothing in the way, this is going to be the look on your small chart, on your refinement chart, on that chart that's used for entries. You tell me, Safia, what happens if they don't match? Do you have a rule that talks about them matching? So you're saying, should you ignore one chart? I'm so confused. The price doesn't match? I'm confused. Show me a picture of what you're talking about. Okay, background color. So guys, remember I said that your brain's going to try to make things more complicated, right? Your brain is going to try and create scenarios outside of your rules. Safia, which one of your rules discusses background color? Okay. I'm assuming you're talking about the NASDAQ in the moment. Remember when we talked about earlier, if your triggers are down and your trend is up? It doesn't agree. You don't have to predict, right? You don't have to guess. But here's a great example. This was red. This was green. But no rules are met. So, Safia, focus on the rules. Guys, focus on the rules. If you have the advantage of momentum, the only way you can have the advantage of momentum, guys, is if the trigger lines and the background agree. Because look, the small are down, the large are flat, they're up, right? Indecision. And look how it dances. And then from there, once you have that, make sure that you have a clear path. And it doesn't mention the color of anything. It's just we're looking on the large chart for the clear path. And now let's go find the entry, right? The rules are met on the large chart. The small chart's going up. The triggers are strong. Everything says up. Rule number 3, ladies and gentlemen, says that you're going to use a limit order, meaning that you're going to be able to wait for the market to come to you. And you're going to use that limit order to buy or sell a pullback. And a pullback is a small retracement in price that's counter to the underlying trend. When everything says up, right? When the big crowd says up, when the big crowd says there's nothing in the way, there's going to be this group of yahoos that want to fight trend. There's going to be these maniacs that want to go against that momentum. And they're going to give you a little pushback on a smaller, faster chart because typically the large chart swallows them up before they get to create any real change in the market. You're going to buy or sell a pullback inside of favorable large triggers. And favorable large triggers are defined as your large triggers, these smooth triggers on your smaller, faster chart, And your synthetic triggers that are on that smaller, faster chart, these stepped triggers are nothing more than the large triggers on your large chart. So when your large and synthetic work together, I'll show you, Lady P. When the large and synthetic work together, overlap, we call this favorable large triggers. And favorable large triggers, guys, are going to give you the smallest area where the market is likely to continue. And rule number 3 says that we're going to buy or sell a pullback at an area. Areas can be Fibonacci support or resistance, mid bands, or yellow 1-to-1s, and they're going to be inside of favorable large triggers. So in order to have a pullback, we have to have a reversal bar on the smaller, faster chart. And at the time of this pullback, at the time of this reversal bar, that fight against everything that says we're going up, you're going to create a window of opportunity. And your window of opportunity for a long trade, for buying the market, extends from your highest point of support to your lowest point of support inside of favorable large triggers. For a short trade, it will extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Nice job, Safia. Goal met again, huh? Is it getting boring meeting your goals every day with consistency? Nice job. Guys, for those of you that are wondering how Safia is meeting her goals at 10 a.m. in the morning, I'm going to share, right? You don't have to send her a message and ask her. What you do need to do is know that Safia posts her trades in class. She tracks her charts. She asks a million questions and seeks clarity. And more importantly, she keeps it simple. That's the recipe for success. So guys, we get a reversal bar. We create our window of opportunity. So Lady P, in order to activate a limit order, if I am looking for a short trade, I'm going to be above price. And if I right click on my chart above price, sell limit 2, right? Sell limit. It creates a limit order that allows me, if price comes up, here, let's put it right here. If price comes up and reaches this limit order, it's going to put me in a short position. And the other side of that, let me push my chart up so that I can get below price while everything says down. If I right click below price, now it creates a limit order below. And if price comes down to this limit order, it's going to put me in a long position. Let's see if we can get price to come up to us. It probably won't because of the momentum, but let's see. So if you right click above, nope. A lot of you are short right now and just took it to Fibonacci. It didn't make it to the higher point. Does that help? Right click above, it's going to give you the opportunity for a sell limit. Right click below, it's going to give you the opportunity for a buy limit. So I would right click on my chart right here, right at the top of that window, right at that highest point of support. And then at that point, I'm going to sit on my hands. And if it comes back down to that highest point of support inside of favorable large triggers, I'm now in a long position. I have the advantage of momentum on my large chart. I have the advantage of a clear path on my large chart. And now I have the advantage of an area where the market is likely to continue. And if I look at from the highest point of my trigger lines to the lowest point of my trigger lines, this is the beginning of it. This is where I'm looking for areas. And then let's fill this in like this. From the highest point of support to the lowest point of support, that's not quite visible. There we go. This becomes the area where the market is likely to continue. Can you guys see that shaded area? Does it need to be a little bit? I accidentally booted every one of my presets. I'll have to fix that this weekend. We're looking within the favorable large triggers, but we're looking from the highest point of support to the lowest point of support. Is everybody okay with this? This is where the market is likely to continue. But because of the momentum on the large chart, we're taking our entry at the top of that window because of all that momentum, because of the clear path. But we know full well that it may push to the bottom of the window, right? Because it is an area. It's a window of opportunity from the top to the bottom. Guys, this is the point where the market is likely to continue. This is where the advantages come into play. This is your best chance of success. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Guys, it is a normal, healthy part of a positive equity curve. We're going to manage our risk before we ever manage our profits. So we're going to put a stop below that window of opportunity, right where the market shouldn't go. And if it does go down there, guys, we're going to exit that trade. We no longer have that third advantage, right? Not a fib line. So PFI, let's change the verbiage. From the highest point of support, right? And that support can be a fib. It can be a mid-band. And you'll notice in this case, it's a mid-band. The highest point of support is that green mid-band. And then there's two fibs. And then there's these yellow 1-to-1s. So let's change the verbiage from the highest point of support to the lowest point of support. Otherwise, you're going to ignore two of the areas. Does that make sense? Three areas inside of favorable large triggers that we're looking for. We're looking for fibs. We're looking for mid-bands. We're looking for 1-to-1s. Those are the areas. Great question. Those are the areas where trades originate from the area. These areas create a bounce point. So PFI, your trigger lines create the range in which you'll look for those bounce points. So we're looking inside from the highest point to the lowest point. This is where we focus our eyes, but we're looking for the actual areas, for the fibs, for the mid-bands, for the 1-to-1s. So let's see if we can find an example. This market is moving. I want a little more basic example. Come back to 947. This market moves. Dun, 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 dun. All right, so here we go, PFI. Everything says down, right? Let's go through a bar by bar. Everything says down, the smalls are still outside. We haven't reached an area, so the path is clear. Is everybody comfortable with that? The large chart leads the way. It doesn't even matter what my small chart says if the large chart doesn't have momentum and a clear path. Good. So now we focus our attention over to the small chart because the rules are met on the large chart. Everything is down, right? Large are down, synthetic are down. I have odds favorable momentum. Is everybody comfortable with this? This is going to be your look. And this is where you're going to be saying to yourself, holy smokes, I'm never going to get a trade. It's running down. There's nothing in the way. Oh my gosh. And then 20 years of study comes into play and this market continues down. And I'm looking at these triggers, PFI. I'm looking to see where the bottom of them are. And I'm looking to see where the top of them are. And I'm looking, what do I have inside? Here I have Fibonacci resistance. I have a mid-band, and I also have 1-to-1s. But in order to create my window of opportunity on my smaller, faster chart, I need a reversal bar. All of these bars going down. I'm waiting for one to point the other direction. And there it is. Now I have a reversal bar. So at the time of the reversal bar, guys, this is how I'm going to do this. I'm going to draw a circle from the bottom of my trigger lines to the top of my trigger lines, right? And then I'm going to look inside of this circle. Do I have any areas? I only have one. And let's take a picture of this. I have one area of resistance inside of favorable large triggers. I have a mid-band. that is inside of favorable large triggers. Everybody good with that so far? This becomes the point where I'm going to right click and I'm going to activate a sell limit just below that midband that's inside of favorable large triggers. And if the market pulls back up to that area, it didn't make it, did it? There we go. I would have moved it down just below the area, but notice how that midband is still inside of favorable large triggers. PFI, only 2 divergences, so it's not a termination, right? It's 2 slowdowns, thank goodness it got me to that midband. And I'm in a trade, and it runs a little bit. Stops are going to keep us safe, and then down it goes. And let me cancel that order so it doesn't get me later. Does that help a little bit on the process, guys? First, the large chart says go. Once the large chart says go, we're going to identify the small chart. We're going to look for the areas inside of favorable large triggers, and we're going to activate a limit order right at the top. And guys, I'm taking this trade 1,000 out of 1,000 times. Because when I have those advantages in place, this is a trade that typically wins 70 to 80% of the time. You impatient people, you're going to want to be great at this in the first week, right? I love that. So PFI, I have it preset. And let me show you what I have. And I don't know that I have a trade. But what I have, yeah, there's absolutely nothing to do on the NASDAQ right now. We'll talk about management right now, and I'll show you. But what you're going to create, and John Novak already has it for you inside here, is an ATM strategy, right? And that ATM strategy says that this is what I'm going to do. And the typical ATM strategy, the typical strategy for entries and exits, PFI, is I'm going to say, let me go here. I'm going to have a 12-tick stop already in place. So the second I enter that market, my stop is going to be right. So if I buy the market right now, my stop is already in place. My targets are already in place, but I'm going to click on that line and I'm going to move it outside of the window of opportunity. I'm going to move it to where the market shouldn't go. But 12 ticks gives me reaction time, right? My targets, I may put them at Fibonacci. I may put them at a predetermined $100 spot. And if that target gets hit on my first contract, it pulls me out of the trade. That profit is mine, right? So yeah, depending on the market, let me close that out because it's not a real trade because the triggers aren't through resistance. So on the S&P, on crude oil, 12 ticks gives you plenty of reaction time. If you're going to try to trade the NASDAQ, 24 ticks gives you that reaction time, but 24 ticks on the NASDAQ is the exact same monetary value as 12 ticks on crude oil. We're just looking for reaction time to put it below the market where it shouldn't go to keep us safe. Buy market now, not with a high probability trend trade PFI, because I know exactly where I want to be in that market before it ever gets to me. In my own personal trading, absolutely, there will be times when I use it. But for the sake of a high probability trend trade, I'm waiting for the market to come to me. And if it comes to me, I'm in that trade. And if it doesn't come to me, it's not my money. And that's one of those things. If it stops short and runs, I don't chase trades. I sit and I wait for that next great opportunity. But I'm never missing this one, guys. I'm never missing this high probability trend trade because this is my foundation. This one's teaching me to read charts. This one's teaching me to recognize advantages. And PFI, Lady P, Cedeno, Lil Saigon, Donovan, Pedro, guys, you can go back and study this. Well, 1 bar is about 10 ticks. That's about 2.5 points, right? PFI, I'll never speak in blanket statements. I'll never say absolutes. If you have every advantage and it misses your entry by a tick, right? Some people, did I K-Pops? K-Pops is the blanket statement, police. I never. Ha ha, you're right, I did. Son of a gun. There we go. So I speak in one absolute in reference to speaking in absolutes. Dang it, K-Pops. You got me there. I like it. So let's check this out. So PFI, hypothetically, market's coming back, right? And it misses your order by a tick. And you go, oh my gosh, I'm going to jump in. And then it does exactly what 25 years of study says that it does. It comes right back to that support inside of favorable large triggers. And you jump in up here because it's going without you, your risk is huge. Your profit potential has been minimized. So no, I prefer to not chase trades. And new users, I see these trades all the time. PFI, are you an engineer by any chance? I love it. You ask all the engineer questions. Absolutely. I'm always using areas to trade from. You're a pharmacist. Okay. Still pretty exact. I like it. So let's talk about the dynamic Renko bars. Let me see if I can find. And I'm going to be real honest with you, PFI, because you're new, and this is for all of you guys. I don't see dynamic Renko bars. I'm not a tech guy. You want to know the truth, guys? You want a little honesty from me? I can't code. I don't understand the algorithms. I don't have any idea how John makes all this stuff happen. And to be completely honest with you, the bar structure, it doesn't matter to me because this has absolutely no relevance on my rules. But your large chart, and it depends on the chart. This is what we call a 13-2 bar, which means that when you double it, I want to say each bar at full extent is 26 ticks, and after that it creates a new bar. And then on a 5-1, it's the same thing. I believe it's 10 ticks on a full bar from about 98 to 88. So one bar on your small chart, if it's a 5-1, is going to be 10 ticks. One bar on your large chart, if it's a full bar, will be 26 ticks. But the cool thing is it has absolutely no relevance to the rules, right? I don't need to know how long these bars are. I don't need to know what creates these awesome triggers. All I need to know is that when I have odds favorable momentum and no termination conditions, my eyes go to that smaller, faster chart looking for the perfect entry at an area inside of favorable large triggers. Whoops, that was the wrong picture to post. And guys, you can go back and study this over the weekend. You can go back 10 days worth of data on 3 different markets that have been given to you, and go back, and every time your rules are met, circle a trade or circle a tail, right? Every time your rules are met, circle a tail. When the smalls are outside, when the path is clear, when things say up, and let's just see what this looks like. It's 6 in the morning, and that's not the perfect setup, but what you'll notice that it pulls directly back to support right there at those large triggers, right? This is a pattern that repeats itself every day, every market. This is a pattern that you can study. Price reaches 1-to-1s, the triggers don't break. I'm waiting to see if this area breaks. So Pedro, what a 1-to-1 is, great question. A 1-to-1 is kind of like a Fibonacci area that prints in the moment. So when your software creates Fibonacci areas, you open your software, okay? And this is kind of the little tech part of it. This is about as advanced as I get. To create a Fibonacci area, to create those red and blue lines, when you open your software, guys, it's doing thousands upon thousands of calculations, individual Fibonacci calculations. It's measuring every swing in the market, every up, every down. It's doing it historically. It's creating synthetic time frames. It's doing it forward. It's projecting forward. And there are millions of these lines. And then your software goes through and it weighs them out and it calculates and it looks for areas of concentration. And from all of this chaos, it creates areas of support and resistance. And these areas of support and resistance, Pedro, if you look at them, they're there, they're in place, right? You know where they are, they're coming up and they're there, and you're trading to them, you're trading from them, and they're very, very in place and they don't move. These yellow 1-to-1s, see how they start printing here? These yellow 1-to-1s are 100% Fibonacci alternates. It is a fib, but these fibs happen from the in the moment, right? Because institutional traders use this 100% measurement quite a bit, and you're going to see that they can create reversals in the market. You can see that they slow the market down, and they can create problems. Guys, excuse me just 1 second. Oops. All right, sorry about that. You're absolutely right, Ron. Guys, never miss an opportunity to say goodbye to your wife or husband. So Pedro, these print in the moment, and we're going to use them the exact same that we use fibs, the exact same way we use fibs. And I want you to see something, guys. When we take these fibs, when we take these 1-to-1s, it doesn't matter what color they are. It doesn't matter if it's a fib, if it's a 1-to-1, if it's a divergence high, if it's a divergence low. I can paint them wheat, whatever that is, right? And I know that when price reaches them and the triggers don't break, as you're leaving divorce court, if the triggers don't break them, then I have a termination condition. So great question, Pedro. They're just fibs in the moment is the way I think about them. So I respect these the exact same way I respect any other fib. Did that answer the question? So guys, this is your plan, right? This is the beginning. And I took this class over a little bit this morning. Your highest probability trend trade should be your focus for 20 days, guys, 20 trading days. Focusing not on winning, focusing not on being the baddest trader in the room, right? But focusing on getting the perfect entry, getting the absolute best of the best. Because I'm going to tell you right now, great entries create manageable trades. Great entries reduce risk. Great entries create more profit potential. I'm going to give you guys this trade checklist. I want you to take it. So I'm going to drop it in the room right now. You can download it, or you can click on it and drag it over to your desktop, guys, and it'll be saved on your computer. I've never had anybody in the history of this checklist follow it to the letter and do worse than 70% winners. This is my plea to you to keep it simple, to keep it focused, to learn these basics before you try to do what everyone else is doing, to learn how to enter the market before you decide that you have to make money. The process will yield results. So there's a checklist, print it out, put it on your desktop, and every time you take a trade, begin to police yourself to make sure that those advantages are in place. For those of you that are a little more visual, here's the exact same checklist. And you know I'm going to use the word, Ron, and I liberated pictures from the study material. What is a good top or bottom? Well, it's a termination that creates a full reversal. Here's the perfect picture of it. What is odds favorable momentum? It's that separation between the small and the large. What's a termination condition look like? Well, if price reaches the area and the triggers don't break, that's a termination condition. And how do I identify that window of opportunity? Here's a picture of a short and a picture of a long that goes through it, guys. So you can study this in the morning, give yourself a 5-minute review to see where you're at. And then finally, I'm going to provide you guys with a basic trading plan. Guys, I told you I'm going to give you everything you need to be successful. This is me doing it. This is a simple plan for consistency. Your goal should be to write your own plan. Your goal has to be to make it yours. It can't be Mark Novak's simple plan for consistency. It has to be Cedeno's simple plan for consistency. It has to be Pedro's simple plan for consistency, right? Because this is your trading, guys. I'm not paying your bills. You've got to get good at this so that you can buy an island and sip pina coladas through the summertime. The first thing that I always say to new users, guys, never fight your large chart direction and never fight the triggers, and you're going to be on the right side of things more often than not. Funny story about a broker that John knew is the broker called John one day. He goes, John, I can pretty much guarantee you $1 million in your account by the end of the year. And my brother was like, man, that sounds great. How do I do it? And he goes, here's what I want you to do, John. I want you to fund an account with $3 million. And then I want you to fight direction. I want you to fight trend every chance you get. You should be down to $1 million by the end of the year. Guys, this is nothing more true. Don't fight direction. Don't fight momentum. True story too, Miraboy. You're defining your entries. This is all you're doing for the first 30 days, guys, is you're defining your entries. This is a marathon. PFI, you didn't get through pharmacy school in a week, right? You're not going to be a successful millionaire day trader within a week. So let's focus on entries. Strong tops and bottoms, terminations that create full reversals. No termination conditions on the large chart, momentum on the large chart, area for entry. Guys, this is your checklist. If the rules are met, take the trade. If the rules aren't met, don't take the trade. Keep it that simple. If you take the trade, you're going to have to manage the trade, right? But you've got to get good at those entries. This spreadsheet, this is your homework for the weekend, guys. I have 260 pictures of rules-based entries. 260 pictures of entries where the rules are met. I'm giving you this spreadsheet right now. Go through and study them. And what you're going to notice is that if you start clicking on these links, there's going to be a common thread. There's going to be odds favorable momentum, and there's going to be no termination conditions, and there's going to be pullbacks to areas inside of favorable large triggers. So when I say when the triggers break, Pedro, great question. I love that you guys are asking questions today. This is how we get to where we want to be, right? We're using this in reference of termination conditions. So when I talk about price reaches the area, when price reaches fibs, one-to-ones, divergence highs or lows, and none of the triggers get through that area, what I'm telling you is that the triggers haven't broken the area, haven't broken through the area. When the small and large triggers break through the area is broken. Resistance begins to act as support. The path is now clear, and rule number 2 is now in place. Let me give you this picture. And this is the most simple approach, Pedro. You either have a clear path because the triggers are on the other side of the problem spot, or you don't, and you sit on your hands and you wait. Does that help? So when I talk about triggers breaking, all I'm talking about is trigger lines beginning to go through an area and getting to the other side. Here's your way to study, guys. Go back and let the rules be met on the first, circle on the second, right? Every great trade needs to be managed. Every wonderful entry needs to be managed, guys. I've got you focused on a pragmatic, mechanical, methodical way of entering the market, a checklist-based entry every time, giving you the highest chance of success because of the advantages are present. You're going to manage it just as methodically, right? Because management takes the ability to read charts. You're learning to read charts in the beginning, but we still want to manage those great entries. Your initial stop is going to go outside of the window of opportunity. It's going to go where the market shouldn't go. If you enter at a mid-band inside of favorable large triggers, your stop is going to go beyond that highest point of resistance inside of those favorable large triggers. So going back to the question earlier, guys, 12 ticks on your trade management strategy gives you time to react, to put the stop in the correct spot. It doesn't mean that your stop is at 12 ticks. Your stop goes outside of the window of opportunity. Because you're in at the best of the best spot, because you have the advantage of momentum, because there's no terminations, you're in this one, this is where the market shouldn't go. And if it goes there, You're stopped out. There's nothing for you to do at this point, and you will take losses, guys. 20 to 30% of the time. Every 10 trades you take, you're going to lose 2 or 3 of them. That's why consistency is so important, because you have a statistical advantage. So you're either stopped out or the second part of your management comes in place. You get a reversal bar in the direction of the trend. If you get a reversal bar in the direction of the trend, that risk gets reduced to a couple ticks above that reversal bar. You've gone from outside of the window to above the reversal bar. You're managing your risk before you manage your profits, guys. And this one still may get hit, but you're getting hit at a smaller loss. Or it's going to go to your first target, and your first target's only $100. This is mechanical, it's methodical, it's if-then. If I get a reversal bar, I move my stop. If it hits my first target of $100, I'm moving my stop to break even. I've got $100 in the bank. Nobody can take that from me, right? I've got this dopamine kick. I've got confidence coming from the memory of success. And now I have absolutely nothing to lose. It either hits my second target of $200 or it stops me out break even, guys. Those are my only 2 choices at this point. I'm keeping my emotions and my opinions out of it. If it hits that target, guys, on a 2 lot, that's a $300 trade. That's a $300 trade with every advantage, right? You manage your risk, you took the best entry, you let it get that first profit, they can't take it from you. The second profit, $300 in the bank. And I do this math every day for you guys because a lot of you guys are in a position in life where $300 in a day doesn't seem like a big day. $300 a day is $1,500 a week, guys, which puts you at $6,000 a month, which puts you at $72,000 a year. That's only on 2 contracts from the best of the best trade. That's 1 trade winning a day, $72,000 a year. It's compounding. What happens when you start adding contracts? You turn that 2 lot into a 20 lot. The exact same management approach. Now you're at $750,000 from the exact same trade with more contracts, right? Unbelievable. So focus on the process because the process yields results. Guys, this is your first 30 days. Your ability to read charts is going to take you to the next level. Your ability to read charts is going to take you from what we call a high probability trend trade, the best of the best, the foundation, into a medium probability trade, right? Because now you can read your charts. And a medium probability trade means that an issue exists. Most of your indicators line up, but something's gone wrong. Your ability to read charts is going to identify that problem, guys. There's no reason to start chasing medium probability trades until you're comfortable with the high probability trend trade. You'll become more comfortable with that high probability trend trade if you go back and study, if you go back and circle those tails, if you fill up a spreadsheet with pictures of high probability trend trades. Medium probability trades are going to be the vast majority of your trades, guys. This is that second step into what you're doing. This is taking that best of the best and expanding. But when you take medium probability trades, you have to manage them assertively. You have to recognize your trouble spots through chart reading. You have to get to a 0 loss level. You have to be able to think on your feet quickly. And one of the biggest tools that you're going to use for medium probability trades, is identifying losses of momentum on a smaller, faster chart. If I'm in the perfect trade at the perfect spot, 3 divergences tells me to get out. If I'm in a medium probability trade and I start sacrificing momentum, that might be my indication to get out. So guys, these medium probability trades, the first one that you're going to take, I'm going to share this with you, then I'm going to take a little break. The first medium probability trade that you're going to take is what we call a 50-50 trade, and it has nothing to do with your chances of success. It has everything to do with the trigger look. When the small triggers break through the area, Pedro, there's that word again. When the small triggers break through the area that was just a termination condition, and you have odds favorable momentum, you have that best of the best, strongest trigger look, This area now has the potential to break. 69.80 may break to the upside, but it's not broken yet. It's not a clear path. And if it's not a clear path, then rule number 2 isn't met, and that becomes your issue. If this has the potential to break, and I'm forfeiting the advantage of a clear path, guys, it's imperative that I don't forfeit. Let me go back to the rules. That I don't forfeit momentum. I have to have odds favorable momentum. That I don't forfeit the entry area. I need to have a low risk entry area because I've already given up the advantage of a clear path. And this is what the look's going to be. Smalls above, large below, if going into resistance. I'm looking for the perfect entry. I'm looking for the best of the best. And on the same simple plan that I gave you, it addresses this 50-50 trade. I still have to have odds favorable momentum on both charts. If I get one of those losses of momentum on the small chart, it means that I've sacrificed momentum. It means that I go from medium probability to low probability. And if I don't have divergence, I want to make sure it's coming from a good top or bottom, from a termination. You'll notice on this 50-50 trade, I put no divergence, right? If divergence prints, there's no trade, no divergence. You're going to manage 50-50 trades differently as well. They have to be aggressive. Still using the window of opportunity, still using the reversal bar, but if divergence prints, exit the trade. Guys, this is 3 times in 4 inches that say divergence kills a 50-50 trade. Quick profits, assertive profits, getting to 0 loss. So I'm going to give you this plan, guys. Focus on the top half. And then embrace the idea that the second half, that these advantages are put into place to keep you safe, right? To give you the best chance of success as you work through things. Small triggers broke through, large triggers did not. Here's one of those 50-50 trades live in the moment. Divergence prints. Oops, let's go back to it. Oh, no divergence on this one just yet. Oh, there it is. Divergence prints on a 50-50 trade. This pulls it out of the equation for you guys. For brand new users, you have to be a little calm. You have to be just a little bit patient. Your money is worth the best entry, guys. Your money is worth the absolute nicest entry. 50-50 trade, no divergence, strong triggers, tiny window of opportunity all day long. 50-50 trade. Strong triggers, no divergence, small window of opportunity all day long. But if those conditions aren't met, guys, sit on your hands. Keep it simple. Embrace the ideas. Guys, that's the first hour that turned into the first hour and a half. So that happens sometimes, right? New users, I know I've got a lot of demos in the room today, so I wanted to take my time and I wanted to make sure that we went through this and I wanted to make sure that we were super thorough. So I'm going to ask you guys, PFI, Pedro, who else is in here? I've got Lil Saigon, I've got Lady P. How we doing, guys? And if I missed you as a new user, I apologize. It's a lot to take in on the first day. Gary, it's a lot to take in your first couple days. But if you simplify, if you keep it easy, if you focus on the advantages, right? If you allow it to be simple, you're going to be able to focus on these things and understand that this is very much a marathon, not a sprint. We're going to get you to where you want to be. And guys, this is how I teach the classroom every day. We're going to reinforce the rules, and then we're going to start looking. And it's all new, right, Pedro? It's like learning a new language. Guys, when I took Spanish 1 in 7th grade, I didn't have any idea what was going on. Drop me in the middle of Mexico right now, I'll get everything that I want and everything that I need because through repetition, right, over and over, I learned the language. Thank you for that, Lady P. I love to teach, and you'll recognize that. And one thing that the people that are in this room will tell you is that I'll never leave you behind. All you have to do is raise your hand, and my goal is to always get you where you want to be. But with that being said, I got to stretch my legs for a second, guys. I would suggest that you do the same. You don't have to stay glued to your monitor for 17 hours. The market will always be there. Stand up, breathe through your eyelids, right? If you have a question, post it in the room. When I come back, I'm going to start looking at all these charts and we're going to see what you guys have been doing, how you've been doing it. I'm going to offer my insights. I'm going to answer your questions. And we're going to head out of this Friday smarter than we walked into it. I'll be back in just a minute, guys. Whew, all right, guys. I am like a mother bear with you. Did you know that? Always trying to keep you safe. And look what just happened here. 50-50 trade, divergence prints, and all be good gosh golly. That would have been a loser, but you guys had a simple plan for success that kept you out of that trade, that kept you from getting stopped out. And I think that's pretty amazing. So what I'm going to do is I'm going to scroll to the top, guys. I have to scroll through all of these messages to get to your charts. So if I miss a question, let me know. I'm going to scroll to the top. I'm going to grab some pictures, and then I'm going to scroll back to the bottom, and I'm going to look for your questions. And what we're going to do is we're going to work together and take a look and see what's going on. So I'm almost to the top. And let's see what we had. Man, you guys are busy today, huh? Ziba got us going with some market replay trades. So remember, we're going to take everything and we're going to focus on rules being met, right? So Ziba, 50-50 trade. Smalls are up, large are up, not a good bottom. Divergence, multiple divergences. Your questions, what's the best to do when you see the market keeps going in the direction of the trend even though divergence is printed. So Ziba, what you just asked me is, Mark, how do I break my rules when I would rather be in the market than following my rules? And that probably wasn't your intention, but that's exactly what that question is. How do I break my rules, Mark? My rules say if divergence prints on a 50-50, I'm not supposed to be in a trade, but I want to be in the trade. So how do I do it? Ziba, sometimes you just have to wait, right? You have to wait for that market to do what it's supposed to do. You can wait till everything rolls over and look for an opportunity, but the reality is, until that path is clear, when these divergents are printing, you have to be okay with the idea that that money isn't your money. And guys, this is such a big common thing with new users, is saying, well, my rules weren't met, but the market did this, and damn it, that's my money. How do I get it? You don't. It's not yours because you've lost the advantages. And trading is about having an edge every time you get in. And it's a pain in the ass, Ziba. Pardon my French. It is a colossal pain in the ass when you watch the market go without you. But I posted this picture this morning because that's exactly what happened. I watched the NASDAQ go from Fibonacci support to Fibonacci resistance, and there wasn't anything that I could have done to have taken that trade. I didn't have one rules-based entry, which meant that it wasn't my money. And I'm going to sit on my hands and I'm going to wait till it is. Because when it is my money, I'm not going to miss it. I'm not going to miss the rules. And guys, the hardest thing that you can do, learning the indicators isn't difficult. Learning the patterns isn't difficult. Doing absolutely nothing when there's nothing to do, that's going to be the most difficult thing that you do as a day trader. So when you ask me, Mark, how do I break my rules? I'm going to say, don't break your rules. There's that 50-50 with divergence. It went up. And then you trade down. Smalls below the large are wide. They're angled in the direction of the trend. Having a synthetic fib over here would have helped you out. But that's the perfect entry in the perfect condition. And Ziba, sometimes the market is wrong. I want everyone to see this because I don't sweat losers. The market has a 50, or it's strong. The triggers are down. They cleared support. Support's behaving as resistance. And Ziba takes the perfect entry at an area inside of favorable large triggers. It doesn't work. Part of the reason it doesn't work is because Ziba's trading the NASDAQ, and the NASDAQ has a different personality. And guys, this is why I teach on crude oil. This is why I teach on the S&P. I'll recognize patterns on the NASDAQ, but it becomes problematic. And Ziba, I want you to see what the difference is on this one. Odds favorable, no termination, everything is beautiful, right? Ziba, are these one-to-ones? Are they a termination or are they a target? This is a great lesson. I'm scrolling down to the bottom because I want participation on this one. NASDAQ is a beast, and if you're not comfortable, PFI, it'll chew your butt up. No. All right, guys, so let's go through it. What's the recipe for a termination condition? Guys, there's a reason I write this so many times. Price reaches an area. Ziba, did price reach the area? No. Is it a termination condition? Everybody, can it be a termination condition if price doesn't reach it? Not just no, but heck no. No, Safia, it can't. If price doesn't reach the area, it can't be a termination condition because that's the first thing that has to happen. Ziba, who cares about potential, right? Let's go back to it again. I have the potential to be a handsome man, but my face keeps getting in the way. We can't worry about potential. It's either a target or it's a termination condition. If price reaches it, it's a termination condition. If it's in the distance, it's a target. Yes, it does have the potential, right? It has the potential to be a termination condition, but who cares about potential? The potential is there, Zeba, that a plane's going to crash through your roof and kill you today. But you don't make your decisions on the day based on that fear of what may happen, right? It's either a target or it's a termination condition. This is a target, right? I'm not exiting because there's a target off in the distance. That's like jumping out of your car 6 miles before the grocery store. I'm potentially going to get there, but I better get out of the car now just in case I do. Does that make sense? I suck at analogies. So that's a target. That's where you were looking to take profits, right? Especially with everything down. I know you do. And we're going to keep working together until you don't. So these one-to-ones right here, is that a target or a termination condition, guys? What do you think? Let's go through the difference a couple times. That's a target that eventually becomes a termination condition. This red fib up here, target or termination condition? Target, right? Let's work on the language. Keep it simple. It's a target. How about this red fib? Target or termination? Target. All right, hold on. Red fib, target or termination condition? Termination. Because price reached it. Do you see it, Zeba? I think you were looking up one. Nothing broke. The large triggers didn't what? Finish your thought. Because we're going to get some clarity on this one. I love this. Zeba, your pictures are giving me the best lessons ever. Thank you. The large didn't what? What's the first part? Who cares? Price reaches. Where are the triggers? Price reaches. Where are the triggers? Don't ever change the language, guys. Price reaches. Where are the triggers? Price reaches. Where are the triggers? Keep saying it in your head. It's a termination because price reached it. The triggers are below. The market continues up. Large and small break resistance. Now we have a clear path to our next potential target. Do you get it? Going up, going up, going up. Red fib's a target, not a term. It's a target. It's a target. Still a target. Son of a gun, it's a term. Isn't that amazing? If you simplify and stay in the moment, guys, you're not going to confuse yourself with a lot of things that don't matter. Great lesson. Does that make sense to everybody? Uh-oh. Jay Solar, all we're talking about is targets or terminations, right? We're not talking about potential trend setups. When price reaches that area, whoops, I'm trying to pause it at it. It's a termination. What's your question? Let's see. The triggers are past this one, right? Now this area is broken. Now it behaves as support. But when we get to that next fib, there's no entry. But we don't care about entries right now, Jay Solar. We're just making sure that everybody's cool with the idea on the difference between a target and a termination condition. Hey, Elvis, I was wondering about you the other day. Man, I hope you're doing great. Target, termination. Awesome lesson today. So yeah, Jay Solar, when we've identified whether it's a target or a termination condition, well, then we can start looking for those entries, right? So Zeba, beautiful profit target, not a term. Great work on that. Thank you. Thank you for posting pictures. Guys, see how much clarity comes for the group? When you post pictures, you're making the world a better place. All right, one more Zeba, I believe. Scrolling up to the top. Good bottom, odds favorable, no termination conditions, pull back to the area, and then PFI, are you with me on this one? I want you to see this, guys, and I love this picture. Why don't we chase trades, guys? Because we have a statistical advantage. It didn't quite make the entry, and it pulls back up, and if you jump in up here, your day is like, oh, and look what it does. Comes right back to the area support inside of favorable large triggers. Ziba, you got a little nervous that it was going without you, right? Got in a little soon. But it did exactly what it was supposed to do, doesn't it? Guys, you have to believe in the methodology. You have to believe that it creates a statistical advantage. You have to do the study. You have to see this setup so many freaking times that you get to the point to where you say, this is my entry, it has to come get me, and if it doesn't, to hell with them, it's not my trade, right? It's hard to do because we want to stay active. And that's not a huge difference, but that's probably on a 3 lot, that's an extra $150, $200 worth of risk, and it's also an extra $200 of lost profit because you got in too soon. Ziba, great picture. And great job on market replay. Guys, this right here lets me know that Ziba's going back and she's studying. She says, I want to be great at this. So I'm going to go back and practice. And Ziba, your head's in the right place and it's looking great. Keep doing what you're doing. Man, we got a lot of pictures. Here we go. Ziba did it. Safia posted in the room. Guys, I'm not going to scroll down for a second. So if you post a question, it's going to take me a minute. All right, Safia, 50-50 trade. Smalls are up, large are not. There's one divergence. You decide to take it anyway with those weakened triggers, one divergence. You manage it aggressively, and you're not willing to lose on the potential to break an area. Safia, very well done. If you're taking medium probability trades, guys, you have to manage them assertively. Or if you're like Mike and you say, I've got the best momentum ever and no divergence and strong triggers, look at this entry, guys. Like a sniper. And allowing momentum to take him to the fib, to grab profits, and notice that he's coming from a termination that creates a full reversal. Mike M., fantastic trading. Gary, weak triggers. Checklist not met. Gary uses a checklist on every trade, and he'll take pictures of rules being met and rules not being met, and just reaffirming that he's a trader that works off of advantages. Nice job, Gary. Derek Lane taking pre-trade pictures. Derek says, you know what, Mark? Everything says up. My path is clear. I've got areas inside of favorable large triggers. I sure hope these guys come back and give me an entry because that's my trade. Nice job, Derek. Gary, pre-trade picture, same one as Derek's. Dig it. Weak triggers. Triggers not through. Divergences printing. Guys, do you see how the advantages go away here? No reason to look for that long. Hope is for the suckers that don't have Nexgen, guys. Weak triggers right at resistance. Coincides with 3 divergences. The only way this could be any less advantageous is if Bigfoot jumped out of the bushes and punched you in the side of the head. Look at the NASDAQ. 3 divergences just a bit ago. Hold on. Bobby T, are you suggesting that 3 divergences in the same location may push the market higher? Sounds made up. And look what it does, guys. It pushes, the path was clear, right? The momentum was weak. Pushes it all the way higher. The small triggers are fighting. That was your higher push. The large chart says more down. The large chart says clear path. The small chart says don't get in yet at the mid band because I want to push higher. And it did. It pushed all the way up to that area of resistance, all the way up to those 1-to-1s. My little Nasdaqians, look at that close on the correct side from the higher area after all the divergences. I wouldn't take this trade because of 3 divergences. That's just me, not my trade. Some of you might, and those 3 divergences told you that it was going to push higher. Kept you from getting in at the mid-band, right? I love patterns. Then Ziba, you had no trade if you didn't have a clear path. Guys, when you fidget with your charts, they're going to look different, right? If you have different days back, if you don't clean out your cache. Let me figure out where I am. Man, a lot of pictures. Here we go, here we go, here we go. Did I look at this one yet? Yep, terminations all day long. Sorry guys, I'm scrolling up, I'm scrolling down, trying to figure out exactly where we are. Look at this, termination, 3 divergences into a termination condition. Nope, that was this one right here. Smalls are through, large are not, no divergence, back to the mid-band. Maybe a potential opportunity there. Gary, great picture. All right, C, are you in here still? I'm not sure who C is. But he says at a termination, everything says down, the market pushes back, he's going to get in at the mid-band and he's going to get paid. See, nice trade. Trading with momentum, trading with direction, right? Trading with a clear path. Derek, let's go with what you said. Derek says he's waiting for a high probability trend trade. South, I like it. Derek, smalls are through the 1-to-1s, but the large are not, right? So let's not call this high probability. Because if the area is not broken, it can't be. And guys, I'm a huge fan of language. I really am. This is a medium probability trade. It is a medium probability trade that comes from a termination condition that has odds favorable momentum. But I want you to notice that there is, in fact, a slowdown on your smaller, faster chart. I like your entry with the strong triggers, and because it comes from a termination condition, maybe we ignore 1 divergence, but we'll manage it assertively, right? Great looking picture, great pre-trade. All right, Lil Saigon, posting pictures. Would I consider this a good entry? I might be, Ziba. You guys are worth it. And I'm not here next week, so we're good. All right, so let's do this. Lil Saigon, are you with me? Guys, I'm the brokenest record that you're ever going to hear, all right? Annotate your charts, guys. Annotate your charts. In the beginning, you're going to ask, hey, Mark, is this a trade? Mark, is this a good trade? Mark, is this a good entry? But what I want you to do is, guys, I want you to embrace the idea that if you write your rules on the chart, you'll never have to ask me if it's a good entry. You'll learn to police yourself. You'll learn to gauge these advantages. So, Lil Saigon, here's what we're going to do. And I appreciate the opportunity to do this. We're going to write the rules on your chart, and we're going to work together. And we're going to see what we can do here. All right. So rule number 1 says odds favorable momentum. And guys, this is for all of you new people. Let's write it on there. Do we have strong triggers? Whoops. Can we bounce all over? Rule number 1 says that I have to have strong triggers. Rule number 1 says that I have to have smalls above the large, and the large have to be wide and angled in the direction of the trend. What say you, new people? PFI, Pedro, Lil Saigon, it's your chart. What do you think? Do we have odds favorable momentum? PFI says no. Okay. And that's what I'm looking for, guys. So Debbie says yes. Guys, Debbie's been with us a little longer than you. So in order to have odds favorable momentum, and guys, this is why I like the new users charts. In order to have odds favorable momentum, Let me open up the picture. From the point where the smalls separate. Nope, you didn't. Not yet. Jay Solar, you were late. You were tardy to the party. It's going to be a little bit before we get to yours. So PFI and Pedro, from that point where the small break away until they return. This is your odds favorable momentum. So if we look at Little Saigon's chart, the smalls have in fact broken away from the large. They're beginning to create that separation. So for me, and hopefully for you, because you should probably be trying to do what I do a little bit, strong triggers is a yes. Because of the separation. Remember, when the scissors are open, they can cut. When the triggers separate, it's odds favorable. And now we get to termination conditions, right? So we know the recipe. Price reaches the area. Right now, the furthest area is this divergence high. The smalls have broken through, the large have not. So what we have is one of those 50-50 looks, guys. It has the potential to break, but it hasn't actually broken. Is everybody cool with that? So we're just going through the rules and we're talking them through. I've got the momentum. I don't quite have a clear path, but it's not necessarily a deal breaker. So if I'm looking for my entry, remember that we're waiting for a reversal bar, right? Didn't get it yet. The market's going up and the entry is right there. Guys, if I get a reversal bar, my window of opportunity is down here. It's at that area of support inside of favorable large triggers. So the rule says that I'm going to buy at an area inside of favorable large triggers. That's rule number 3. So rule number 3 hasn't had time to be met yet. Does that make sense, guys? And this is that, oh my gosh, it's going without me moment. Everything says up, everything's screaming to the top side, everything's going up. I'm going to jump in and hope for the best, right? But the most probable thing is that it's going to pull back before it pulls up. Guys, the market is fear and greed. It's emotion. And this smaller, faster chart shows that emotion more clearly. So Lil Saigon, would I consider this a good entry? For my rules, for a high probability trend trade rules, this one doesn't have rule number 3 in play, which means that your risk, do you see how your stop right here is actually above an area of support inside of favorable large triggers? Your stop is right in the path to your absolute best entry. Does that make sense? And for you newer people, does that make sense? This is an amazing picture, and this is exactly what you guys want to be doing. Make every mistake that you can make. But hopefully you're sticking around for the feedback, right? And it's okay to answer me when I give feedback. When I say, hey, does that make sense? Tell me that it makes sense, or I assume that you don't understand, and that just makes my heart sad. Ron C., with odds favorable momentum, with a clear path, he'll take an entry and an exit, base hit, different rules, right? But it all starts with a termination that gives odds favorable, that gives a clear path. And Ron has a little different style of taking his trades. But what I will tell you is that Ron's trades look the same. 95 out of 100 of his trades look exactly the same because Ron has a plan that he follows to the letter because it gives him a statistical advantage, which is pretty amazing. So Pedro, let's go back to the recipe. And exactly, PFI. So Pedro, let's go back to the recipe. And guys, I'm telling you right now, repetition is the key to understanding, which is why I say the same things over and over and over. So Pedro, actually, you know what? Let's do this one. Let me pull this picture up. Where's my picture? There it is. In order for it to be a clear path, Pedro, the small and the large have to get above resistance. You comfortable with that? That's that breaking, right? So the path is clear. So you're asking how close to the area for the path to still be clear? That's a great question. Let me answer that for you. And we talked about it just a second ago. You may have been out of the room. As long as price has not reached the area, as long as price has not made it to that line, that's a target, right? That's a clear path. If everything's going down and price hasn't reached it, the path is clear. But what you're probably wondering is, well, Mark, I'm getting close to it, right? I'm getting close to that area. Doesn't that create a problem? Great question. I'm going to phrase that problem for you. Yeah, it's a common question too. Let me show you something pretty cool about why we buy and sell pullbacks. Are you ready? You're going to love this. And I'll take a picture of the picture. And guys, you do, don't you? Otherwise, it's ridiculous to take a trade if you don't have a clear path. So, Pedro, from the top of this bar to my potential problem spot is about 7 ticks, right? Pedro, that sucks. That's not potential, is it? That's what you're wondering. We're pretty close, Mark. But remember, Pedro, that we're buying a pullback, right? We're buying a pullback to an area inside of favorable large triggers, which means that my actual potential is from that area of support inside of favorable large triggers up to that trouble spot, which means now I suddenly have like 21 ticks, over $200 worth of profit. Even though I'm close on that bar, I'm buying a pullback. Does that make sense? So you might be 5 ticks off of that potential, and you're going, oh my gosh, I'm too close, I'm too close. But the reality is that great entry is coming from all the way back here, which means that you've got boatloads of opportunity to get to that next spot. Did that answer the question? And you're going to see that a lot. And this is a pretty big one. And guys, while we're going through common things that freak out new users, on a smaller, faster chart, these small triggers are probably going to turn against you. If they don't, how's price ever going to get back to that best of the best spot, right? Without a little loss of momentum on a smaller, faster chart, how am I ever going to get back to that best of the best area? Remember that the momentum that we're counting on, that we're looking for, that we're relying on, that momentum happens on the large chart. When these little triggers turn against us, who cares? When this 1-to-1 is in our way, who cares? 3 divergences on the small chart. That's it, guys. This 1-to-1 gives you the perfect bounce to the ultimate spot to beautiful profits. Large chart leads the way, and that's a great example on that one. Large chart leads the way. Great question, Pedro. Thank you for that. And that's a common question, right? That's pretty normal. People ask that question all the time. And now all of you know. I'm going to scroll up. Let's get to the next ones. This is going to be a one break kind of day, guys. You are being amazing giving us all these questions, all of these things to look at. Thank you so much for it. Let me see where I'm at. Dun, 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 dun. We just saw that one. Scrolling down. Magic Mike. That's what I'm going to start calling you. Mike says everything says up, right? Not quite a clear path. It's getting there. You're almost there. Perfect entry. Area support inside of favorable large triggers. Opportunity to make some money, right? And then that second divergence prints and it pushes it lower and it takes you out. Mike, the one thing is it's your time of entry. Those large triggers haven't quite breached the area. They're trying to, they're getting there, they're working on it, but they haven't quite made it, right? And then we lose 2 divergences. This second divergence, when the triggers aren't through, man, that's a great opportunity to jump ship and protect some profits. I hope that made sense. I'm not scrolling to the bottom just yet, so if you have a question about that, let me know. Gary, everything says down, small's outside. The path is clear, so 2 divergences doesn't freak you out. Crazy late entry. Crazy late entry. Gary, this is a high probability trend trade scenario. Market flow is unnecessary, right? Get in at the area, reduce your risk. But beautiful job taking it right down to those targets, right? Because these were targets. These were targets. These were not termination conditions in the moment. Beautiful job, Gary. Strong work. All right, Jay Solar, now I got you. We made it to you. Jay Solar says, smalls are through, large or not, 50-50, nice odds favorable momentum. Jay Solar, picture perfect entry, right? Area of resistance, no divergence, rock star entry. You take quick profits, take $100 because you're like, man, I'm getting paid. And you said that you exited when the market started going up. So you ready, Jay Solar? Let's work on management a little bit. Once again, what does the large chart say? I hope you're with me in here. Large chart says down. Large chart says odds favorable. Large chart says no slowdown, right? Small chart says no slowdown. Small chart says odds favorable. Small chart says area for entry. Jay Solar, are you with me so far? Your entry is the best of the best. This is absolutely beautiful. What changed when you started looking at those fluctuations on the small chart? What turned against you? What was a negative? What didn't have odds favorable? What didn't have that path clear? Absolutely nothing, right? You watched a small chart go up and down when the large chart said go down. Does that make sense? Nothing. So maybe take quick profits at the small triggers if that's your scary point, but let that momentum lead the way. Maybe this divergence creates an exit opportunity, right? Because your checklist says if there's divergence, exit the trade. So at least let your exit conditions be met, guys. If your exit conditions aren't met, sit on your hands. Make them come get you. Does that make sense, Jay Solar? That's hard to do. Because, guys, it's hard to watch the market turn against you. But when you trust what you see on the large chart, it makes it easier. Great picture. Great entry. Great reason for taking that trade. And you're still never going to get mad if you make a couple $100. Isn't it amazing when your mistakes are worth a couple $100? When you get mad because your mistake resulted in smaller profits? I love that. We were laughing about that the other day. John and I were like, oh man, I mismanaged that. Well, what'd you make on it? Oh, I made $800. Dang it. Alan, termination. Everything says down. Everything looks good. No divergence. Area for entry. Arg, and you didn't get a fill, right? And then divergence prints and your rules aren't met and you sit on your hands. Alan, that happens sometimes. And great job following your plan, not jumping into that trade when your rules weren't met. Solid. Jay Solar. You can't ask me which one to trust more, Jay Solar. Why on God's green earth are you adding charts? Why are you trying to look at more instead of the best? Right? All right, Jay Solar, I feel comfortable with you because you've been with me for a while, right? Which do I trust more? Hey, Jay Solar, how about if you trust that that's a termination condition and sit on your hands? How's that? You didn't need a 21. You didn't need a range chart. You didn't need to phone a friend. Termination condition was reached. Sit on your hands. Let it be easy. Guys, the more charts you give yourself, and Jay Solar, I say that because if I start looking elsewhere for answers that go against my rules, I'm going to find them. Yeah. I know you wanted to hear it, and I appreciate the picture because it's a great lesson, right? So if it's 50-50 on a large chart, Jay Solar, shouldn't it be perfect on this chart? The same way, if it's 50-50 on this chart, shouldn't it be perfect on this chart? See how that works? Trickle down. So if this chart isn't perfect and this chart absolutely sucks, oh my gosh, sit on your hands. Great picture, man. Great picture. And it reminds you guys that simplicity is the key. Simplicity is the path. Simplicity is going to put you where you want to be, but you've got to embrace it. You got to hug it, squeeze it, make it yours. Jose trades. Some above the large. So, Jose, 50-50 with divergence. Didn't work out. That's it. Triggers are pretty flat, but 50-50 with divergence didn't work. And Jose, do you see this picture right now? I want to go down to the bottom again. I want you to see this. 10:08. Look at how those small triggers barely made it, guys. Those small triggers. I posted this at the beginning of class. I'm going to post it again. Guys, you 50-50 traders, stop deciding that a fraction of an inch past a fib is your best look, right? Stop deciding that this is a solid look for a 50-50. It's okay, Jose. We miss them sometimes. If the market's not coming from a termination condition, it reduces the chances of success. If the small triggers barely eke through that area, remember that these are areas. It lessens the chance of success. If you're trying to break through multiple areas, it lessens the chance of success. Remember that we're looking for advantages. So you 50-50 traders, I want to stop seeing you hope that this fraction of an inch through an area, stop treating it like an advantage. This is the most lost 50-50. Right up there with this huge gap back to the large triggers. Guys, it's a medium probability trade. Give yourself some room, right? Give yourself some ability for that thing to say, I had the potential to break and I'm kind of screaming through the area already. Jay Solar, all the triggers are passed, but nowhere to enter. Is this considered good momentum? Oh, it's not considered good momentum. Absolutely, Jay Solar. And guys, look at the way he goes through and he talks it through. I have clear path, but I don't have momentum, right? I love it. Jay Solar, your smaller chart confirms that you're losing momentum. Triggers inside, divergence. And do you notice how there's no areas inside of favorable large triggers up here? Rules 1 and rules 3 aren't met. 2/3 of the advantages are gone. Jay Solar, great job. We don't do anything, right? You follow your rules and your rules weren't met. Beautiful read. Awesome. Guys, there is no we in trading. I will never come sit on your lap and click the mouse and get you in and out of trades. So you've got to learn this you got to learn it yourself, right? Keep it individual. Gary showing the NASDAQ stops and thank you for that, Gary, sharing that ATM strategy. Also here, odds favorable. And Jose, great lesson here, right? It's 50-50 on this area, but guys, we don't care, right? We're in the moment. We are in the moment, and price reached resistance, and absolutely no trigger lines broke through it. Jose, Solar, Jay Solar, termination condition, textbook. Potential entry, not unless you're trading into termination conditions. Does that make sense? He's saying this is a 50-50. Look at that. But price reached the next area, guys. This area was cleared as well, but price reached support. So guys, one termination condition only gets you to the next termination condition. This is another great read. This is a great one. 50-50 look, but termination on the second. Solid. Guys, chart reading will take you to the promised land. Chart reading will get you exactly where you want to be. You just have to practice it over and over. Joel, it's a slow one. Look at all these pictures you guys are posting. Joel, I'm having trouble getting yours to come up. There it is. Look at that. Joel said he broke his rules, right? That's awesome. But Joel, let's talk about this one. Was it a high probability trend trade or was it a medium probability trend trade? And guys, this is why I think writing your rules on the chart instead of sticking to a checklist. Hey, Lady P, thank you for being here. I'm not here next week. John Novak has a class next week. Don't miss it. It's going to be amazing. Going to be amazing. So, Joel, do you have odds favorable? Let's start at the top. Joel, do you have a termination that creates a full reversal? What do you say? Let's talk through it together, Joel. Termination creates a full reversal. That's a yes. Odds favorable momentum. What do you think? I like it. You said that there were no termination conditions. So where are we at here? 50-50, right? Smalls below, large above. And that's that barely eked through look again. So you're 50-50, Joel. So we're using the wrong checklist. And then you get divergence right from a fib on the 50-50, right? Do you see how maybe that wasn't your best shot? Yeah, that's okay. So when you go back and review this one, you'll be like, oh man, I got to make sure that I'm checking for those fibs and make sure that I'm good. Guys, is it possible? No, because it's been there for a little bit, so we're okay. But Joel, great. Write your rules, guys. Checklists are great, but checklists are only great if you're actually making sure that they're 100% solid, right? That they are, in fact, what they say they are. And that's a pretty common thing with new users is you start doing this checklist approach, but you forget to read your checklist. You just assume that it's there, therefore, it's the right trade. Termination. Gary says, I'm taking a break. I'm going to let him break these areas before I try to do anything at all. Everything says down. The path is clear, right? He's below resistance. Triggers made it. So Gary takes the pullback. And it works out beautifully. Nice trade, Gary. Direction, clear path. Gave up momentum. Area inside. Beautiful. Well done. Sophia, termination, right? Pivot stop out. Full reversal. Strong triggers. 50-50. With one divergence. So you take it at the area. And you get paid on the way down. 50-50 trade though, right? 50-50 with divergence, but it has strong triggers, has a tiny window of opportunity, calculated risk. Beautiful job following the trend and direction. Ron, once again, everything says down. The path is clear. He takes a small chart. Jump in, get paid, jump out, go get a chili dog. Beautiful trading, Ron. All right, Jay Solar. Oh, there's so much. Jay Solar, I want to do something right here. Sophia's plan isn't your plan, is it, Jay Solar? That's what you have to realize, guys. Sophia's plan is not your plan. Just because she does something doesn't make it wrong if it fits Sophia's plan. That's why I tell you guys, write your own plans. It has to be yours. Jay Solar, John Novak takes trades that I would never dream of taking, and I have the utmost respect for his ability to read a chart and to take a trade and to manage a trade. But because I'm not John Novak, my brain doesn't work like John Novak, I get my butt kicked 20 ways to Sunday if I try to trade like John Novak, right? So I've got to stay in my lane. I've got to stay what's comfortable for me. What gives me the advantages that I can recognize effortlessly? But what I was going to say, Jay Solar, once again, no need for these charts at all because it's a termination condition. Too many charts. Do you ever see The Last Samurai, guys? Too many mind, right? Let's do it on images real quick. The Last Samurai, too many mind. What does that mean? Mind the people, mind the enemy. All right, Ziba, you have to watch a movie this weekend. Too many mind. What does that mean? That means that you're focusing on too much stuff. And you're going to get stabbed in the belly, right? So Jay Solar, where did your picture go? Son of a gun. Let me scroll back and get it. So too many mind. What am I saying? Jay Solar, everything that you needed to know. Where did that picture go? Sorry. Everything that you needed to know was right here on a termination condition. Everything that you needed to be successful was right here on one chart in an area that may stop the market. That's all you needed, right? But instead, you're looking at this chart. You're looking at this chart. You're wondering about this potential injury. And you're saying, in other words, only enter if the 50-50 rules checklist is met, right? So what you're doing is you're forming an opinion, Jay Solar, and you may not have been, but the average bear, when you say, I'm expecting for this fib to break so that I can get a 50-50 trade, what you're saying is, I'm expecting this fib to break. You're trying to predict the future. Do you know what I'm expecting? I'm expecting this fib to hold and to rocket down to the next Fibonacci area because I'm not coming from a good bottom, right? Or I'm expecting the market to dance sideways for a while because price reacts to fibs. And if you stay present in the moment, watch how effortless life can be as a day trader. Termination condition reached, not a darn thing to do. Whew. Guys, I'm not a smart man, but I can read patterns. And this right here tells me don't worry about anything. You can start playing if-then. So instead of expecting the fib to break, let's change the language once again. If the fib breaks, I don't know if it will, then I'll look for my rules to be met. If the market reverses, then I'll look for my rules to be met. And what it does is it relieves you of the burden of opinion. It relieves you of having to have a crystal ball. So you're just waiting. Jose, do you have rules that say that if you have a strong bottom on the 21.3, that's part of your checklist? Or is that something that you just included because you think more information is better? I'm going to refine you back to simplicity. 2 charts. Guys, it's everything you need until you're successful. 2 charts. It can. But that's a weak bottom, right? And this is what you're basing your trades off of? So what if I went up to a 34.5 J Solar and that was strong down? Then which chart wins, right? And then I go up to a daily chart and a daily chart said that we've put in a bottom. Then who wins? If you keep it simple, these two work together symbiotically. And I'm not saying get rid of them forever, but I'm saying get great at everything. Get good at your management, right? And then you're good. So simplicity. You're doing awesome. Jay Solar, you have leaps and bounds in the last couple weeks. It's been amazing and a lot of fun to watch. Did we get that one, Gary? Gary, you can't use a high probability trend trade checklist for a momentum style trade. I'm glad to see that you've added extra mid bands. Oh my gosh. It's a nice trade. It's not a trend trade. That checklist is useless, right? Jose, do you know my answer? Do you know my answer on whether or not you should worry about this? Thank goodness. Look at that. Remember when you were expecting it to break for a 50-50? And look what happened. That was kind of cool the way that worked out. Even with that strong bottom. Because look, you reach resistance everywhere. Those large triggers didn't follow. It's easy to make up what you want to see. So now we have a 50-50. Smalls are down, larger termination, full reversal, odds favorable, no divergence. You've got one line, right? If you get in at 70.54, your stop is minimal. Solid. Great read. Great read. I want to take a second and say thank you guys. Thank you everybody for flooding this room with so many pictures. There have been so many amazing lessons coming off of your pictures today. Daryl, let's see what you did. Daryl, 50-50 trade. Did you have divergence? Nope. Look at that small risk outside of the window. Daryl, are you with me? Guys, this is a picture of a trade that doesn't work. Notice how it's not a good bottom, though. That's okay. 50-50, strong triggers. They have railed through the areas. No divergence, little window of opportunity. Daryl, I'm not going to lie. I'd probably take this trade too. You had more advantages than disadvantages. Your rules were met for a 50-50 trade. And this is a cost of doing business. This is a just... Man, say next and move on. Beautiful trade, rules met, everything looked good. It just didn't work out. Solid. Small losses are a normal part of a positive equity curve. You're going to take them. Manage risk before you manage reward. M directly into a termination condition, but M said with all of this momentum, coming from a termination, super strong triggers. He says, I'm going to let this momentum push down for a retest. No divergence. M, you broke rule number 2 like you were getting paid to do it, but you took it at the right spot. It created a manageable trade, and you managed assertively because you know that this support might be holding. And M, are you with me? Can I show you one of the smartest things that you did here? And you may not have even realized that you did it. And this is for you guys too. And I'm never advocating trading into termination conditions. But what you did, Em, is you said, I've reached Fibonacci resistance, and it reversed the market, and it's cranking to the downside. And when you hit support, you let the market react. You waited to see what the reaction was as it came back all the way to those large triggers, right? Does that make sense, Em? And then when it closes the gap, this is your reaction. 0, not even a blink on the large chart. Everything still stayed down on the small chart, right? No divergence. You let the reaction happen, and then you took the entry after it closes the gap. M, this is a brilliant entry, and I don't know if you understand the brilliance of it. You let the market react to the area before you just tried to trade into it. Nice job. I am not advocating trading into termination conditions. But what I am saying is that when you learn how to read your charts, guys, your trades make a little different. That's solid. That's advanced, guys. That's what's coming. When you see these trades that don't fit the rules, that's what's coming when you learn how to read your charts. That's the direction that you're headed. Don't be in a hurry to get there. Safia, strong triggers, 50-50, one divergence, perfect entry, boom, bang, bing, you get paid. Absolutely. So PFI, what we do every day is I record these and then they'll go into YouTube tomorrow, or actually after class, that's the wrong one. Um, from the Nexgen page on YouTube, if you go to live, let me give you the streams link. This will be posted this afternoon. And guys, these are live classes for the last 2 months. The first hour and a half is rules over and over and over again. The first hour is the same darn hour every day, getting these great lessons. Go back and watch it over. Nice job. Safia, that was number 5. And guys, Safia traded a 50-50 with divergence, didn't she? Strong triggers, termination, full reversal, breaking through, strong triggers, little window, manage the risk. Your trades will change and you will grow as you grow with the software. As you'll begin to recognize advantages. Everything says up, every trigger roll, Joel, area inside of triggers, boom, bang, bing, straight to the fib. Outstanding. And I just said boom, bang, bing. So you know it's good. Gary, termination. No reason to trade into those terminations. That is dangerous, and there's just no room to get back to it. I'm glad it worked for you. Sure looks smart after the fact, right? But that is directly into areas that may stop the market. I mean, that is not even a glimpse. Guys, when I've got 173 fibs in the same place, I'm on my hands. Too many opportunities there for things to go wrong. Gary, getting towards the bottom, guys. It's always 2020, isn't it? And you're saying termination. And guys, this is one of the things. This was a termination as well. And Gary, I'm not beating you up here. You traded directly into a termination here because you got bored, but you refused to trade into a termination condition here. So one of the things that I like for you guys to do is try to be consistent, right? Try to do the same thing every time. Give yourself the advantages every time, because you're going to get lucky. And guys, the second you go live, the second you're off that sim account, that luck's going to run out and you're going to have your ass handed to you. Who posted this one? Joel, there's that 50-50. Joel says, hey guys, look, a 50-50. Trade. No divergence. There's the pullback. Who was this? Was this Jose Trades? Jose, it's a good shot at a 50-50, man. But let's go back to that picture that I posted earlier. Actually, you know what? Let me capture this picture. Broken record, right? Jose, I know you're refining some stuff. This area wasn't broken. This area wasn't broken. This area wasn't broken. And this area was maybe pretty close to being broken, right? You have 4 areas that you're hoping this momentum crashes through. It takes away some of the advantages, right? Because what you're saying is that I'm expecting momentum to break 4 areas at this point to continue in the direction of the trend. That's a lot of work for this poor market to do. It really is. And then when you have that 50-50, and Jose, do you see where the small triggers are at the time of your entry? If they were all the way up here, if you were at that mid band and they were all the way up here, I like it. But at this point, they're fighting you. And this is one of those NASDAQ kind of nuances. Let me see. I put a picture together yesterday because I am working on that thing for you. Really for everybody, but Jose asked for it. So let's see if I can get my pictures to load up real quick. Whoops. So Jose, this was kind of a chain of events yesterday. That's that entry, right? And you're like, yes, here I go. But look at how close the small triggers are and look how they're down and vertical. If you take this entry, smalls act as resistance on the NASDAQ. And it pushes right beyond. And what you're going to find, Jose, and this one wasn't perfect. It had split triggers, right? So that's a problem. And when these small triggers rail against you on the NASDAQ, guys, it creates issues. It really does. And it gives you an opportunity to wait for that best of the best, that close on the correct side. So on this one, it may have pushed all the way down here and then continued back up. And if you waited for that close on the correct side at support that was likely to hold, maybe there was an opportunity down here. And Jose, I know that you're working through it. And it looks like you're on an account that's funded. As you work through these NASDAQ things, it's all right to go to sim, right? It's okay to learn those things. Ziba, 50-50. That's your first divergence, right? Smalls are outside of the large, strong, but not your trade. Divergence prints on a 50-50. And you're right on a fib on your 5-1. I'm not sure why it's not over here. But yeah, you're absolutely right. Or if you took the trade without divergence from right here, that becomes your profit spot. Nicely done, Ziba. Debbie, I was wondering when we'd see something from you. Debbie says, everything says up, that path is clearing, no divergence, take an entry. And she's using Fibonacci for targets, right? Beautiful. Nicely done, Debbie. I hope you hit your profits. It's a little late, right? But everything's going the direction, so you feel good about it. I like it. If divergence prints on the 50-50, does that change this divergence print? What was that, the S&P? Let's look. You got in, I'm not sure where that was. Let me see. What time was that? Did I get timestamps from you? Right around 11:11, which puts us, this is where you got in. It didn't make the midband, right? And this is where you got in. Divergence prints, telling you, yeah, you got in up here. So your risk was a little bigger. That's okay, it's established. But when this divergence on the 50-50 prints, that's a great opportunity. Protect yourself, right? Nice job. Great job. It has to work. It's just, it's impossible. They can't all work. The key is to get more working than don't, right? The key is to have those advantages. So you, am I really? I'm cutting in and out. Hold on. All right, I switched ports. Are we good? Is that better? No? Can you guys hear me? Yes? I think this little USB splitter I have might be overheating. Where did this happen? Into a termination condition. Bummer. So there we go. Bad bottom, not a termination that creates a full reversal. I'm into resistance, right? Sit on your hands. Be patient. Guys, how did we do today? I noticed a lot of you are going off to happy hour early. Are you walking out a little bit smarter than you walked in, I hope? Guys, Pedro, I know it's day one, right? But it's a little clarity. K-Pops calling me out on those absolutes. I'll buy you a beer next time I'm in Dallas. Johnny Rocket's getting better. Joel getting better. Safia, better a little bit every day. Debbie, I hope consistency. Guys, you're going to notice that the people that are showing you all these winners, they're showing you all these winners. They're posting their trades. They're talking about them. They're getting feedback on them. And their goal is to get better and better. Ziva, you don't need to work on your fear just yet. How do we get rid of fear? Let's talk about that. Fear is an ugly word. Ugh. Hate the word fear. Because fear comes, and this isn't ugly, fear comes from uncertainty, right? Why are we scared of walking into a dark room? Because we don't know what's there, right? Why are we scared going on a first date? Because we don't know how it's going to end up. Fear comes from uncertainty. Ziva, if you write a plan, everybody, if you write a plan, if you say on a 50-50, Ziva, you say this is exactly what it's going to take to get me into this trade, and I absolutely, positively refuse to take a 50-50 trade if this isn't true. Why does this become your plan? This becomes your plan, and the only reason rules should ever be your plan is because you've looked at 100 instances of this happening. That's because you don't trust them. You know what the words say, Ziva, but you don't trust them yet. You don't have the repetition. You can go through like this and you can see what the best entries look like, right? But until you put the effort in, until you put the work in, until you clearly define it, Ziva, I promise you, if you go find me 50 examples of this, perfect, scroll back, historical, market replay, and only find entries in mechanical, and you keep it mechanical, you're going to develop that trust. It happens, I know, because I was there too. Guys, do me a favor. For those of you that have been doing this a little bit longer, when you first started, and I told you that in order to get the best entry, you had to buy the market when it was coming towards you, when the market was screaming towards you. How many of you said, holy shit, there is no way I'm doing that. I'm going to wait for the market to start going up because I'm scared to death that it's going to run me over, right? Because you didn't trust it. And then on that same token, everybody. But on that same token, how many of you jumped in right here because once again, you guys all swear like sailors and you said, holy shit, it's going to go without me. I better enter the market. I did. You better believe I did because I didn't trust. And the amazing thing, guys, and I promise you that this is the path that you're on, is with enough repetition, wild horses couldn't keep you out of this position, getting in at the area inside of favorable large triggers. There's not a person alive that could make you put that stop inside of that window of opportunity. You'll always be here, and eventually you're going to get to the point that there will be an absolute snowball's chance in hell of you jumping out of that market because the small chart gave you a tiny little fluctuation in price when everything's set up. This is the trust factor, guys. This is the repetition. You need to take pictures and you need to present them in class. And you need to make sure that you're seeing things correctly. And if you go through the process, guys, if you embrace the idea that the only thing you need to do to be successful, you ready? Here we go again. Broken record. Is post your trades in class, track them in a spreadsheet so that you can study them each and every morning, learn the rules, and simplify so that they become easy. Trust comes from it, guys. And when you have trust, The world's a beautiful place because trust means that you're without doubt, you're without suspicion. You believe in the truth and the strength of the methodology that's been put in place. And what you'll find too is this crazy little thing is that you'll stop expecting to win every trade. You are going to go into every trade believing that there's a shot, but you're going to understand that if your execution is solid, if your execution is rules-based, then you had a statistical advantage. You had an edge. You have a proven pattern that repeats itself daily that says that if I flip this coin 100 times, 70 times it's going to land on heads, so I will never bet against heads. And guys, that's what we do at Nexgen. You've got the best software in the world. I don't care what anybody says. I believe that wholeheartedly from the bottom of my core. This software is brilliant, right? Oh, you're going to have fun. Thank you for that. All you have to do is learn how to use it, and that's what I'm here for. Guys, I am gone next week. I'm going to go celebrate my 25th anniversary with my beautiful wife. We're going to go to Canada, and we're going to have a blast. John Novak is going to show up, and he's going to show you smart stuff all day, every day, 3 hours a day. I want you to come in here. Thanks, guys. And I want you to pick his brain clean. And if he says something that isn't clear, I want you to insist on clarity, okay? Promise me that. Because he's smart. And sometimes we got to remind him that we're not on his level. He's going to hate that I said that. But it's true. My brother is brilliant. And I want you to pick everything you can out of him. And this class is recorded. Go back and watch it. It's going to be posted in just a few minutes. I'm going to enjoy the heck out of my vacation. I'm not even bringing my laptop. So if you send me a message on Discord, guys, I'm not going to see it until a week from today. I appreciate you guys. Thank you so much. You give me job security. And I'll see you guys a week from Monday. Be good, everybody. Take care.